Record session on Wall Street. Of course, investors digesting the earnings that continue to come through, the likes of Standard Chartered, BP, Moller, some of the big names that have come through with earnings beating this morning, weighing that up against what we're hearing from the central banks. The Reserve Bank of Australia, front and centre, as we mentioned in the headlines, looking ahead to the Fed on Wednesday and the Bank of England on Thursday. Let's check in then on how things are shaping up. The Spanish IBEX is down 0.5%. Here in the UK, the FTSE 100 is down by 0.2%. COP26 continues, of course, in Glasgow. We'll get out to Francine shortly. The market's now pricing in a 50% chance of a rate hike by the BOE on Thursday. That is the central bank to watch, of course. The CAC 40 in France is down by 10 points, just over 0.1%. Let's check in on some of the cross assets then that we're looking at. Iron ore is back in focus for us again today, falling more than 5%, close to 6%. This is on the back of the news that supply in terms of steel production in China is likely to be curtailed, so weakening demand for iron ore, at least for the moment. The Australian 3-year is in focus on the back of that decision for the RBA and the Reserve Bank there to drop its yield curve control. You can see some demand there for the 3-year yield, the 3-year bond, I should say, yields just slightly lower for the Australian 3-year. And you had some commentary, of course, from the Philip Lowe, the head of the Reserve Bank, suggesting that it's unclear when the bank is looking to raise rates, focus very much on the fundamentals and the data. That is the Aussie dollar currently. Now you're looking at it lower by 0.7% at 74 cents per US dollar. Okay, let's get the Bloomberg Business Flash now with Laura Wright. Laura.
Thanks, Tom. Standard Chartered has stuck to a flat outlook for earnings growth for 2021 after a rise in trading income helped boost profits by 44% in the third quarter. The London-based lender's underlying pre-tax profit rose to $1.08 billion, beating a company-compiled forecast. Loan provisions sank to $107 million, but were about double analyst estimates.
As we look forwards, we have said every 100 basis points of improvement in interest rates on a full year basis is worth just over $1 billion to our bottom line.
Singapore's top central banker says he's watching for signs of accelerating inflation and is ready to act, underscoring how policymakers globally are refocusing attention on rising prices. Ravi Menon spoke to us exclusively ahead of the Singapore FinTech Festival that starts on November the 8th.
We know they can't last forever. I mean, there'll be adjustments made. But how long they last is hard to say. And the longer they last, then you have the risk that some of inflation becomes entrenched and expectations then build up. So that's a big unknown, and that's a risk factor.
Rivian is planning to raise as much as $8.4 billion in an IPO that could become the biggest ever by an EV company. The Amazon-backed electric truck maker plans to sell 135 million shares at a range of $57 to $62 each. At the top of that price range, Rivian would have a market value of $53 billion. It's already attracted cornerstone investors such as Blackstone and Soros funds. That's the Bloomberg Business Flash. Tom.
Laura, thank you very much indeed. Okay, European equity markets currently trading essentially, well, lower by 0.3%. You're seeing gains over in Germany. The FTSE MIB is flat. Here in the UK, you're seeing losses of 0.2%. The big central bank action today, of course, the Reserve Bank of Australia bowing to market pressure, abandoning its yield target whilst also signalling that it is open to raising rates earlier than its previous guidance of 2024. Joining us for more is Eddie van der Welt from our Markets Live team. Eddie, is this an example of a central bank capitulating to the bond market?
You know, whether or not the central bank has actually capitulated or whether they just got it wrong and the market got it right, I'm not sure. But certainly the market was ahead of the central bank. And this is important because we're also seeing a little bit of a split at places like the ECB, where the ECB is saying, look, we're not going to tighten next year. And the market's saying, well, actually, you might have to, right? So I think this feeds through into other markets, and particularly at the Bank of England this week. You know, with the Fed, we're pretty clear what they're going to do. They're going to taper, right? But the question is how fast they're going to taper, and you know how quickly we get to the actual tightening of rates. And I think at the moment what we're seeing across the board is that markets are saying, look, inflation's getting away from you, and you're going to have to start paying attention at some point.
So the importance of the read across from what's happening in Australia to other markets and other central banks, and whether the ECB indeed comes under pressure. And as you say, the time frame when it comes to the Fed for the taper. When it comes to earnings, it's been solid. And we've had some more corporates coming out, Moller-Maersk, BP, looking pretty strong. You've got buybacks there. Is there more in the tank for these corporates, for these earnings in the fourth quarter and the first quarter of next year?
Such a good question, that. Look, we've had strong earnings. They were not as strong as they were in the previous quarter, right? We're seeing a little bit of a softening. But at the same time, you know, we're still getting good readings. People are still surprised. The question is whether, you know, as we go to the end of the year, whether this rally starts to taper off, if you'll pardon me coining a phrase there. But look, I think the fact here is that if there was any fear of a taper tantrum coming in markets, right, that's now gone, because we know that the taper is coming and we haven't really seen any feed through. So where would that trigger come from? Well, we've got rising infection rates in some parts of the world, but really there's nothing to spook markets right at this moment in time. So it's hard to see how, you know, the stock market capitulates at this point.
What about the supply chain constraints? It's a key focus for us. We've been hearing about it from the likes of Moller-Maersk. Of course, they still see very strong demand. You're seeing what's happening in the ports being backed up, whether it's LA, Long Beach, or Piraeus Port in Greece. To what extent is that going to be sustained? Are you seeing any signals, any signs in the data that you look at that the supply chain constraints are starting to ease?
Absolutely. Look, we've been looking at the chip lead times, and some of those have been shortening. So people are starting to get hold of them, or at least the pace at which you have to wait longer, that has slowed. And the other thing that we're seeing is that some shipping indexes, like the Baltic Dry, that's come down significantly from early October. Now, we are still at very elevated levels, and there are no signs that the supply chain issues are just going to disappear overnight. But, you know, supply chains and the people who run them are smart, and they adapt over time. And I think that's what we're starting to see. The question is whether that comes early enough to dissipate some of the pressure that we've seen in wages, because if the wage inflation comes through before we see inflation from supply chains softening, then it's too late, and the central bank.
That changes the dynamic for the central banks. They've been pretty key about that, haven't they? The stickiness of that wage inflation. That's really interesting. As ever, excellent insights there from our MLive's Eddie van der Welt. Let's cross over now to what's happening in Glasgow. The COP26 climate talks are well underway, with a procession of world leaders setting out their plans for curbing global warming. Francine Lecroix, of course, on the ground. She's been there since Sunday. Fran, what were the big surprises then? India really stepping up, it seems. Modi with this pledge around 2070.
Yeah, and this really actually reinvigorated the talks. Now, of course, the devil's in the detail, as always, Tom, and we need to now figure out exactly how India is going to transition this. But if you look at the three biggest emitters in the world, China, the US, and of course, India. India was the only one that came out with this pledge, frankly, by surprise. It kind of took everyone by surprise, even if it's 2 decades later than a lot of Western economies. 2070, if they can stick to it, if they found, if they find over $1 trillion to be able to finance this, and this is probably the key question. But if they manage it, this is still in line with the 1.5 degree pledge that we're trying to achieve. So it was, something that a lot of commentators here were very happy about, especially if the other two big emitters, the U.S., because the president is hamstrung at home, he couldn't really pledge anything new. He is working a lot on methane, and we'll get to that in a second. And China, of course, not new pledges, and at the same time, not even showing up. No video address from China. The other thing, Tom, is methane. And this is, a quick fix if people pledge to it. It's basically a pledge that would cut methane by 30% from the 2020 levels by 2030. It's something that the G20 had tried to, rally countries. They didn't get it, but now we have 90 signatories of this joint US-EU involvement.
So tackling methane is key, and a big step up there from India. But as you say, the details, the devil in the details, and maybe we'll get more of that being fleshed out in the days ahead. Francine Lacroix in Glasgow on the ground for us, covering all of this and speaking to some big names across the policy space and, of course, in the corporate space as well. She'll be back in the programme at 8:30, including a conversation, by the way, with the UK CEO of Deutsche Bank. Okay, coming up, a big day for earnings here in Europe. I'm going to dive into the corporate news and break that down for you as well. This is Bloomberg.
Okay, guys, good morning. How are you doing today? If you remember, yesterday we had stop for euro at 115.82. We purchased position right now, still the same, 115.92. I'm placing a stop for this position. So if it will move lower, we will have £1,000 in profit. Okay, whereas 82 we purchased yesterday. Right here. Okay, guys, stay safe.
City.
We're in London, in Sydney, in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
This is Bloomberg Daybreak with Lee.
Balance of Power on Bloomberg Radio.
Welcome to Daybreak Australia.
This is Bloomberg Technology.
And this is Bloomberg Green.
To recap the headlines.
You do not want to miss this story.
Really good news on the jobless claims
How
front.
are you thinking about those dynamics?
Happy Tuesday, welcome back to the Open. We are 13 minutes into the European trading day. Some profit taking across the European space this morning, down 0.3% or so after some record moves and some record highs hit yesterday on Wall Street and in Europe. We got a line crossing in terms of Tesla. That was a company that notched up gains of about 8% in the session yesterday. It's falling in the pre-market, though, by about 2%, with Elon Musk coming out on Twitter saying that the Hertz deal is not a done deal. This was the reporting from Bloomberg, in fact, that Hertz had agreed to buy 100,000 Teslas. So Musk pushing back on the idea that this is completely set in stone. A bit of pressure there pre-market for Tesla. Of course, the context is it's had a stellar run over the last few days. Let's recap what's happening in the earnings space then. We had a big day in terms of some of the corporate numbers out of the likes of BP, Standard Chartered, Maersk as well. That was crucial in terms of supply chains, what we're seeing at ports. And we spoke, Anna Edwards spoke to the CEO of that company. He talked about consolidation in the space, continuing demand for Maersk. That is a company that, by the way, reported third quarter EBITDA of close to $7 billion US, currently down 2%. BP also coming in with a beat, down though 0.2%. They also announced a $1.25 billion share buyback. Standard Chartered down by almost 6%. They didn't raise their earnings outlook for the full year. They do expect to see income growth in the range of 5 to 7% in 2022. For more on the earnings story and, of course, the central bank action as well, let's bring in Louise Dudley, Global Equities Portfolio Manager at Hermes Fund Managers. Louise, thank you for joining us this morning. What is your take of where things stand in the earnings picture and whether we are now looking at peak earnings given the backdrop of growth and the concerns about inflation?
Yeah, so far I think it's been a bit more positive than people expected. I think expectations had come off a bit towards the end of September, and actually companies are coming in quite strong. The fundamentals definitely supporting, some of those outlook pictures for the economy. Yes, inflation definitely a buzzword. Supply chain constraints coming in as well, but people are still seeing that demand, and therefore that's pulling that through. People are delaying orders rather than cancelling. So definitely still seeing that strong demand, focusing on the outlook, and so far we're seeing record beats. So it's great.
And do you have clarity? Do you feel like you have clarity as to which parts of the equity markets are best positioned to weather ongoing supply chain constraints, Louise?
So definitely the staples so far have struggled the most. They're also facing a lot of energy price hikes as well. That's also coming in. In general, kind of Europe versus the US. The US has definitely been stronger. Europe may be still to come, but definitely growth sentiment working really well for the US.
And Louise, where are you finding the ballast now for your portfolio over at Hermes?
Yeah, so I mean, we look for a broad range of characteristics, and so therefore very sensitive to some of the volatility that we've seen. So, last week, very much in terms of growth, sentiment working very strongly. Yesterday, we had that rebound into value, very much positioning for that ongoing cyclical recovery. So those value names, definitely with rates, expectations coming in, the banks looking really strong as well. So it's about that kind of quality, but also the value tilt as well. So a bit of balance coming in. And I think, one of the things is definitely the cyclical areas that are yet to rebound, expected to do well. On top of that, the large cap names really benefiting from the strong balance sheets that they've built up over the last year.
How do you want to be looking and changing the makeup of that portfolio if indeed the analysis is correct when it comes to the rate hike cycle? The view from some that you're going to see rate hikes pulled forward, so you're going to see a sooner than expected cycle in terms of rate hikes, but for a shorter period of time. Is that if that is what we get, how should investors be looking to reposition?
Yeah, I think at the moment it seems like the market's a bit ahead of what all the central banks are doing. The central banks seem to be kind of almost following the market a little bit. So not too worried in terms of any big shocks coming in. I think all the central banks are very sensitive to that. They don't want to disrupt this strong rebound that we've had. So to a certain extent, I think maybe the market has got it right. Definitely in terms of some of the inflation numbers, people are so cautious about that kind of spiraling away that actually we're seeing really quite modest moves from the central banks and lots of signaling as well.
Where do you stand in terms of your regional bias? I'm particularly focused on US versus Europe at this point. Is the bias towards Europe given that tilt towards value and cyclicals?
So actually we have more strength within the US actually, and I think the US continues to be a very strong market, continues to do well over the last couple of years. The consumer within the US is also very strong. I think we've obviously got a lot of support from the infrastructure bill still coming through. And I think maybe the main thing is maybe still underweight emerging markets. So that's an area where, still struggling with some of the kind of Delta variant raises, still a lot of disruption, manufacturing numbers not coming through as strong as they have been. And so maybe that's where maybe we're seeing the weakest area, contrast to the US.
Okay, so underweight emerging markets, overweight in the US. Louise Dudley, portfolio manager for global equities at Hermes Fund Managers, continues to see upside broadly for equities. Okay, coming up, BP boosts its buyback. The oil and gas giant reporting third quarter earnings that beat estimates. We're going to get more on that story next. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
You talk about hiring aggressively at the moment. Can you walk me through how challenging that is at the moment? How difficult is it to find the right people?
Well, things have changed. Again, the world has changed under the pandemic, and you all know worldwide, what the challenges with getting people back into the workforce.
We have a plan that we laid out in August of last year, which has a number of targets that we are focused on. One of them is to deliver between 12 and 14% return on average capital employed by the middle of this decade, by 2025. We're well on track for that. At today's oil prices, as you might imagine, we're doing very, very well. So very focused on the operational reliability of the business, reliability up, availability up in the quarter, very focused on capital discipline, being very careful, $13 billion of going into the business, or maybe a little bit less this year. You're seeing now is, quite frankly, at these prices, a business that is a real cash machine, and that allows us to do what we did in the second quarter, that 4% hike in the dividend. We believe we can raise it 4% per annum through to 2025 at $60 oil. $1.25 billion again this quarter. That's $3 billion now this year so far, and we think we can do $1 billion a quarter out to 2025 at $60.
That was the BP CEO, Bernard Looney, speaking to Bloomberg earlier on those third quarter earnings. And for more, we're joined by Bloomberg's executive editor for energy and commodities, Will Kennedy. Will, what are the main takeaways? The investors don't seem to be overly optimistic, overly pleased by the results we've seen, despite that $1.25 billion share buyback. The share's currently trading lower by just over 1%.
Yeah, I mean, there was a solid set of results. I mean, they came in ahead of what analysts were expecting. They announced more buybacks for investors. The BP's giant but slightly secretive trading business performed very well, clearly making a lot of money out of the wild swings we've seen in global gas prices. So it's a little surprising that the shares are off. Perhaps investors were expecting more in terms of buybacks, and you know, that is the mantra for investors in the oil and gas sector right now, is show us the cash returns. We want more dividends. We want more buybacks. I don't think management teams can go fast enough.
And well, they've got to balance the need to continue to invest as part of this transition. And we heard about that $13 billion of CapEx. Do we have clarity on where exactly that's going to be channeled?
That was quite interesting because 13 billion was in line with what they said previously. So they're really keeping a lid on spending both in the oil and gas business and in the new energy business. That puts them a little bit out of step with the rest of the industry, which announced slightly higher CapEx spending. And that comes against the background, of course, of rising costs. Steel and other inputs into all sorts of projects are rising. So you're getting less bang for each dollar that you're spending. That capital discipline, I think, is another sign that Looney is very focused on maximizing shareholder returns, finding as much cash as possible to distribute to investors rather than invest too much, which is what investors don't want.
It sounds like you think they could be positioning for further buybacks.
I think that's absolutely right. I mean,
ahead.
he signaled that. He said at current prices they can go at more than $1 billion a quarter. They've signaled that they will increase the dividend by 4% a year. So that's very much the strategy for Looney, is to give a lot of clear guidance to investors about what they can expect. I think the problem for companies like BP is that a lot of investors remain opposed to investing in oil and gas, and we've seen a lot of long-term investors starting to exit the industry. At the same time, those investors are still there, are slightly skeptical of the value of investing in new energies for these oil and gas companies. And if we compare BP and Shell, and of course Shell has been attacked by an activist, with Exxon and Chevron are much more about, we will produce as much cash as possible and hand it back to you. So I think the skepticism is about what exactly is the strategy for BP with the new energy business.
Given the COP26 backdrop, who is leading in terms of that energy transition amongst the majors?
Well, who's going fastest? Yeah. I mean, I think the Europeans are going fastest. I mean, clearly Total, Shell, BP are the ones who are investing. The question really for the industry is, do investors want that, or do they want the cash to spend as they see fit, or do they want these oil majors to build large low-carbon businesses? Do they think oil majors can do that? That's really the existential question for the whole oil and gas industry at the moment.
Okay, Will, excellent as ever. Thank you very much indeed. Bloomberg's executive editor for energy and commodities, Will Kennedy, breaking down those BP earnings, the results, but the broader context for the oil space more generally. Up next, we're going to go to Glasgow for the latest updates from the COP26 summit. Francine is on the ground. We're going to discuss green finance with Deutsche Bank's UK and Ireland CEO, Tina Lee. The markets across Europe, you're seeing a bit of profit taking, down 0.2%. Here in the UK, you're lower by 0.5. That's because basic resources is dragging down the index. Iron ore is off by between 5 and 6% on the back of concerns about the cut to steel production in China. There's plenty more ahead. Stay with us. This is Bloomberg.
хорошо подготовлены, насколько это было возможно за столь короткие сроки. Это на самом деле эксперимент. Поэтому мне не хочется употреблять такие слова, как страх, боязнь и все прочее. Мне хочется говорить, что это очень волнительно, но одновременно и радостно, потому что, ну, вы же понимаете, как мало людей вообще там были. А у нас есть возможность полететь в космос, и не просто полететь в космос, а сделать там то, что мы умеем по-настоящему хорошо делать на Земле. Это снять кино.
Тоже это не пробовали, вот в чем дело-то. У нас же экспериментальный во многом этот проект. Поэтому мы сейчас столкнемся с кинематографическими нюансами, которые мы могли предвидеть отчасти, какие-то, наверное, не могли предвидеть. То есть, несмотря даже на то, что, опять же, все делились с нами там космическим опытом и так далее. Но это опыт, это первый раз. Ну, то есть второй будет проще.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Welcome to the Bloomberg COP26 Climate Summit Special. I'm Francine Lacqua here in Glasgow. Now, there is quite a lot going on here in Glasgow and elsewhere, and here are your top stories. Narendra Modi surprises COP26. The Indian Prime Minister says the world's third biggest emitter will be net zero, but not until 2070. Brazil's climate turnaround. Well, the South American nation says it will sign the global pledge to cut methane emissions. And this hour, we also discuss green finance and ESG with Deutsche Bank's Tina Lee. You can send in your questions on IB Plus TV Go. So on the agenda at COP tomorrow, finance. Back in April, 43 banks formed the Net Zero Banking Alliance. Among them was Deutsche Bank. Well, with me to discuss all of this is Deutsche Bank's goals and objectives is UK and Ireland Chief Executive Tina Lee. Tina, thank you so much for joining us. We're both here in Glasgow. We're in different parts of the city, but we focus a lot on finance tomorrow. And I guess my question is, how do you measure some of the things that's in your books? How do you measure CO2 emissions in your trading books?
So it's something that we have really started to focus on over the last year or so. So we're looking to assess all our portfolio emissions. It's something that we're aiming to be able to publish by the end of 2022. So it's really all about monitoring and measuring our emissions and also really being able to assess the climate risk that is in our portfolio. So we've really started to see climate risk becoming a key prudential risk as identified by our regulators. So we look to publish our carbon footprint of our €440 billion loan portfolio by the end of next year, our green asset ratio as well as obviously participating in the climate change stress tests. So I think there's going to be a lot more public information out there in relation to Deutsche Bank in the next year or so, along with many of our other peers.
Tina, DWS is, of course, facing some probes on greenwashing. What needs to happen in the asset management world and in finance for investors to be confident that, there's no greenwashing?
So I think greenwashing is absolutely a topic that the industry has to take incredibly seriously. I think it really goes to the heart of maintaining the integrity of all ESG activity and making sure that it's safeguarded. So, at Deutsche Bank, we make sure and we try to ensure that really all our policies and our guidance is overseen by our group sustainability office. The one thing that I would say is that when we think about the way that taxonomies are developing, global standards are aligning, and actually the way that the landscape is evolving so quickly that certainly I know that we at Deutsche Bank and the rest of the industry are learning and improving our knowledge almost every day. So I think greenwashing and ensuring that that doesn't happen has to be a key priority.
Tina, what's your green offering looking like actually in the UK? Is it green bonds? Is it other initiatives? What's Deutsche Bank looking at?
So, I mean, green finance, I think it really will go to the heart of everything that we're doing. I mean, ESG isn't something now that is to the sideline. For us, it's really front and center of our strategy. So, yes, I think green bonds will continue to be a key area of finance for us. We've already lead managed 4 out of the 6 largest ESG issues this quarter. But it's also about really ensuring that we can help our clients transition effectively to a net zero world. So whether that be in terms of financing renewable energy projects or whether it be advising clients on how they themselves can actually transition to net zero, I think there's lots of opportunity for making sure that that green finance actually happens as fast as possible.
The UK, the EU, all offering actually differing taxonomies. How helpful is that? And what do we need to do to have a global standard?
So I think taxonomies are really important, and I think it really does go to the heart of the integrity of the system. So certainly I think we welcome the news and the progress that the EU has made with regard to developing its own taxonomy. But really alignment of global standards I think is going to be key. I think both for banks that stand willing and able to actually finance this transition, but also really for clients in terms of really understanding, their own emissions that come out of their own corporations and making sure that we have the right standards and we have the same science-based targets and the same quality of granular data that we really need to make sure that we're actually evaluating the transition in an effective way. So a taxonomy and actually a global taxonomy is really part of that.
What can we expect actually from Finance Day tomorrow here at Glasgow? I know there's, the chances of success are about 50-50 when you speak to a lot of insiders on these climate talks. How can finance really support the transition with numbers?
So I think that whilst finance has an absolutely critical role to play, and I think over the weekend we heard that there was an estimate of something like $100 trillion that's needed to finance that transition. But banks can't do this on their own. I think that there needs to be a key role played by governments in terms of providing the right incentives, but also regulators in terms of making sure that they can support that green revolution. So certainly I think initiatives like GFANZ and like the Net Zero Banking Alliance is going to be absolutely key because it really has, I think, tremendous power in terms of a real convening capability in getting together. I think now the Net Zero Banking Alliance is something like 84 different institutions. I'm sure that's going to grow. But really having that alignment, I think, is really important in terms of allowing banks to play a key role in this transition.
What do you need from regulators and governments to be able to support finance in a way that is substantive and makes more sense?
So in terms of the government's role, I mean, certainly when we sort of think about the role that the federal government in Germany is playing with regard to whether it be direct grants to facilitate R&D and innovation in these sectors, also in some cases potential tax incentives, but also I think in the context of COP26, I think carbon pricing also becomes really important, both in terms of really making sure that we are pricing carbon effectively, so that it actually does align to the damage that it is doing to our planet, but also in terms of being able to allow those key innovative technologies to compete effectively.
Tina, thank you so much for joining us today. Tina Lee, both losing our voices. It's very cold in Glasgow. The Chief Executive of Deutsche Bank UK and Ireland joining us this morning. Now let's get straight to the Bloomberg First Word News with Laura Wright. Hi, Laura.
Hi, Francine. Indian Prime Minister Narendra Modi has surprised the COP26 climate summit with a pledge of net zero emissions by 2070. The announcement injects new life into talks that were set back by a disappointing outcome from the G20 meeting in Rome. Though India's goal is 2 decades behind richer nations such as the US and the UK, it's compatible with what scientists say is needed to avoid catastrophic global warming. Brazil will sign the global methane pledge, making it the second biggest emitter after the US to join up. The move represents a change in Brazil's stance, which has previously favored measures to address all gases instead of specific ones. Signatories commit to reducing methane releases by 30% by 2030. Brazil's emissions come mostly from cattle and other agriculture. 100 countries representing 85% of the world's forests have agreed to halt and reverse deforestation by 2030. In a major new commitment by Glasgow, Russia, Brazil and Canada, Indonesia are among nations committing to the plan, which was spearheaded by the conference host, the UK. The inclusion of Brazil, home to the world's largest tropical rainforest, is crucial to the initiative and comes amid a turnaround in the country's ambitions to reduce global emissions. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Tom Francine.
All right, Laura Wright there with our main stories from COP and climate. Now, coming up, Norway is Europe's largest producer of oil. We speak to the climate minister, Espen Barth Eide, about the country's green transition plans. That's coming up next, and this is Bloomberg. Is there at the moment amongst the asset managers that actually some of the ESG labeled products, then if you probe, are not green?
Well, look, there is some stress, and it's great that there's that scrutiny, and there's that skepticism or healthy skepticism about ESG labels or sustainable labels. And that, again, is one of the reasons we're having this ruthless, relentless focus on net zero, because in the end, look, we can't stabilize the climate unless we get to net zero. And it's a simple, these are hard numbers. Your emissions are either A or B, they're going up or down. And if they're going down, are they going down consistent with the science? We anchor it in the science, the same science the UN and others use for the 1.5 degree objectives.
Should this not be compulsory? Should we not have regulators coming in and saying, look, this is a new definition, you stick by it, and we're going to measure it?
So I think it's a great question. So let's look at what happened with TCFD, climate disclosure. 6 years ago, you and I were in Paris. We talked about this. We talked about other things. Now that's moving to become mandatory.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Presidency and pre-presidency. And I think that we've got to do it. We've got to help people to adapt. We've got to mitigate. But above all, we've got to change the numbers. We've got to bend the curve. We've got to stop this remorseless increase in CO2, because there are people around this room whose populations, vulnerable populations who have done nothing to deserve it, will be in the front line.
Well, welcome back to our climate special from Glasgow, COP26, day 2, and you're hearing there from Boris Johnson, also the host, of course, of this COP26, and he's talking about some of the pledges. Yesterday, we had a pretty impassioned speech, I have to say, from a lot of world leaders. I mean, some of them were really also heartbreaking stories about some of the smaller countries being submerged in water. And then we caught up also with a lot of chief executives and a lot of the leaders of bigger countries that say, it was quite emotional, and it kind of really brought home what we're dealing with. Now, in June 2020, Norway announced a green transition package to actually invest in sustainable power and infrastructure. The country's $2.6 billion carbon capture project could be a blueprint in helping other countries bury their emissions. Well, we're delighted to be joined right here in Glasgow by Espen Barth Eide, Norway's Minister of Climate and Environment. Minister, thank you so much, as always, for giving a little bit of time in your busy schedule.
Great to be on your show.
You're actually here doing negotiations. I mean, you're here to get a deal done. How difficult is it for your country to be seen as climate change when you're so dependent on oil?
Well, I think it makes it even more important that we are very upfront and center on working on climate change, because we actually want the business model that we've been living through to change. We want a fossil-free world. We recognize that the world's energy systems are still predominantly fossil, but we want to contribute to the change to make them renewable, but also make sure that we can use renewables for everything: electric cars, electric buses, planes, ships, but also other alternative fuels that can, help in industry and so on. So we believe that, precisely because we are an oil-dependent country, we need to take a lead on this climate agenda as well.
But how can actually we have some of the commitments if you continue drilling oil? And I know the transition takes time.
Yeah.
But are there, behind closed doors, do you get a lot of these tough questions?
Not really, because if we were one of those petroleum countries that try to slow down this process,
right,
we would very correctly be criticized, and we should have been. But on the contrary, we actually want this process to go faster, because we think that we can play a role also in that future renewable, circular, sustainable economy. And we're also thinking very actively back home about how we transition from oil and gas into this renewable future. So what we want for the world is we want to ourselves. But so far, people are still buying the product. And the problem is on the demand side, that we have to change our demand for oil, gas, and coal.
Minister, will there actually be a mandate for the Sovereign Wealth Fund to be net zero?
So our Sovereign Wealth Fund is the largest in the world. It's really a really big investor. And we want this also to be the leading fund in the world for taking climate risk and for thinking about how do we align with the Paris Agreement. That means going net zero in all its investments. Of course, all the 9,000 or whatever number of companies it owns cannot be net zero tomorrow, but they need credible strategies to get there, so that the fund, which is meant for eternity, has to be invested in such a way that it doesn't mess up with eternity. And if we continue on this path, we don't know if eternity exists, because we are undermining life on the planet.
But is this actually mandated? And again, is it a scope? I mean, when can we see them reach a scope 3? Because this is really a linchpin of all this
so we'll be working on the details of this. But what we have said as a very new government, remember we came in only 2.5 weeks ago, so what we said in the campaign and what we have reconfirmed in our government platform is we want the fund to be the leading actor in responsible financing, also thinking about the Paris commitments and net zero. Exactly how we do that has to be detailed, because this is a big serious issue. It's a lot of money. But the idea is to go for an investment strategy that prioritizes and emphasizes companies that has a net zero ambition.
And Minister, as always, the devil's in the details. So do you think they will be part of the Net Zero Alliance?
So I think that's a very interesting conversation that we already had with Patricia Espinosa and with other people engaged there. We will draw that conclusion in Parliament when we have been through it. But I think the Net Zero Alliance is a very positive move, because I think the more institutional investors, funds, banks, insurance companies, you name it, private and public, that actually go in that direction, that changes the world, because that makes more money available for all the new stuff and less money available for all the grey and brown stuff that we used to do.
I mean, if you look at some of the other countries, do you think they'll be swayed by what Norway is doing? So, will other oil-rich countries look at Norway and say, well, if they can do it, I can do it too?
Well, I mean, I think we matter because we are on the world scale, we're not a very big producer of oil. We're big among the Western countries, and we're very important in the European gas market. So in that sense, I think setting a high standard can also inspire others to follow suit. And I definitely think that oil-producing countries also have to think through what they can contribute with in this big quest. But I repeat that the main thing we need to do is to make sure that we have enough renewable energy available, but B, enough capacity to use it, because it doesn't help just to have it. You have to be able to transform it into use in agriculture, in fisheries, in industry, in transport, in buildings and infrastructure.
And that requires money. Is there a piece of technology that actually, is there a piece of technology that needs to get cheaper that would make your life a lot easier for that transition?
The good news is, and here's some really good news, when you go renewable, you're actually replacing something relatively expensive with something cheaper. It's much easier to go from expensive to cheap than to go to expensive to more expensive, right? But sometimes you need an upfront investment. If you look at poor countries in development, for instance, we would like to help them with serious money to simply jump the entire fossil age and go straight into the future, while that we, leapfrog and don't be locked into a fossil economy that rich countries are now eventually leaving. So, but I also think I want to highlight the importance of carbon capture and storage, or carbon capture use and storage, because there's also a U there that some of this captured carbon can be used for good purposes. We will not reach net zero without CCS. It's not possible. Basically, we need to reduce emissions. We need to protect forests and pitlands and so on that captures, but we do need industrial as well. And here we have been taking a lead for many years, and we're developing a major reserve under the North Sea, where we can put a lot of captured carbon, and that will help significantly, I think. So this is also a technology that we want to take the lead in.
Minister, thank you so much for joining us today. Espen Barth Eide there, the Norway Minister of Climate and Environment, joining us. Now, we're just also hearing from Boris Johnson. He just speaking, the Prime Minister of India speaking live after the surprise 2070 net zero pledge. Now, what was interesting yesterday is that the Prime Minister of India spoke at length, and it was right at the end when he pledged to be net zero by 2070. It is 2 decades after a lot of the richer nations, but if you speak to scientists, they say this does make a difference and actually would be in line with the Paris Agreement. This is Bloomberg.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Welcome back to the Bloomberg COP26 Climate Summit special show. I'm Francine Lacqua here in Glasgow. So the EU Council President Charles Michel says leaders at COP26 must work together to combat climate change. Well, he spoke to Bloomberg's Maria Tadeo about the chances of a significant breakthrough.
We need to act now, immediately. 2 years ago, we took an important decision in Europe. We decided to make Europe the first neutral continent by 2050. We decided also to strengthen our goal for 2030, and we've put in place a package with concrete measures, and we are negotiating with all the member states in order to decide. But of course, it will work only if all the world, if all the countries, if the private companies, if we are all in the same boat, following the same direction.
And is that your message to China, Russia, I guess also President Bolsonaro in Brazil, that they need to do more?
Yes, and yesterday we were together in the G20, and this was also an important moment in order to try to convince more countries in the world to play a strong role. Of course, we understand very well that we need to take into account the starting point. There are different situations in the different countries in the world, but it's important to decide, to have very clear, ambitious goals. Point one and point two. It's also important the tools, financing and carbon pricing. I think that those tools are the most effective.
And you mentioned such a great point, which is the carbon pricing. There is, of course, expectations or hopes that by the end of COP we're going to get something like an ETS, but global. Yeah. Are you confident that's going to happen? It would be a real change.
I know that sometimes we have the impression that everything is blocked, but sometimes you can also observe that it's possible to accelerate, to have more political will. And indeed, with our experience in Europe, we have put in place for many years an ETS system. It works.
Well, that was the EU Council President Charles Michel speaking to our Maria Tadeo. Now let's get more on methane. A lot to blame for the climate problem goes to the burning of fossil fuels, which of course adds carbon dioxide to the atmosphere. Now, carbon dioxide is only half the problem. As the world heads towards zeroing out all of the impact of greenhouse gases, attention will have to be given to all gases, especially methane. Well, Bloomberg's Zachary Mider explains.
If you think about the fossil fuels that are down in the ground, one of the main ones is actually methane. And what we refer to as natural gas is essentially a combination of gases that come up from the ground that are mostly methane, with a few other gases thrown in there. Methane is a super powerful greenhouse gas. It has about 80 times the global warming potential of carbon dioxide over a 20-year period. And scientists think that about a quarter of all the human-caused warming that we've experienced to date is because of methane emissions by humans. We do a lot of different things to put methane in the atmosphere. Raising livestock is a big contributor. Growing rice is another one. Landfills, sewage, there's all different kinds of things. And then, of course, oil and gas.
Bloomberg's Zachary Mider there explaining why methane is harmful for the environment. And of course, the other big news that we had over the last 24 hours is that we're expecting 90 countries to sign up to this EU-US proposal on methane. More from COP26 throughout the day.
is a gigantic part of our economic life and will be for a long time, for our lifetimes. But that does not mean that we should be naive in the way that we look at our critical national infrastructure, the way we look at, you mentioned nuclear power, you mentioned 5G technology. Those are all legitimate concerns that any government, many other governments around the world have. But I want to be, I've said this many times, it's worth repeating, I am no Sinophobe, very far from it. I think.
Do you think you're the last Sinophile in the cabinet?
No, I expect there are lots of. Look, China is a great country in civilization.
What about wind power? Would you let them buy offshore wind power? That's infrastructure.
I think you'd have to
railways.
You'd have to look at you'd have to look at what was you're defining as strategic or critical.
Do you see Deutsche Bank ready to pay more and pay out more in terms of bonuses for staff to have that strong talent that I'm sure you want?
Well, look, it's a war for talent. It has been, in other cycles before. It is now. We're finding that we're competitive in that war for talent.
Markets are overreacting to these short-term issues that may well persist well into 2022.
I think central banks are always behind markets.
This market telling the central banks that they have lost the narrative. This forward guidance is of no relevance.
My advice to central bankers would be, basically keep your eyes on the prize.
This is Bloomberg Surveillance, early edition with Anna Edwards, Matt Miller, and Kaylee Lines.
It is 9 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong. On this Tuesday, November the 2nd, our top stories today. Australia gives in to market pressure. The central bank has abandoned a bond yield target after inflation leads traders to price in higher borrowing costs. Midterm election preview. Today's vote for governor in Virginia could offer the clearest picture yet of how much momentum Republicans have. And Biden launches an attack on methane. Dozens of countries sign on to a joint effort by the US and the EU. Plus, we'll go live to Glasgow to talk with Bank of America CEO Brian Moynihan. A warm welcome to the program, everybody. This is Bloomberg Surveillance Early Edition. Kaylee, it is not every day that Australian assets are front and center, but they have been recently, as they seem to have been leading the narrative, leading the conversation on just how much tightening we should expect from central banks globally.
Yeah, that RBA decision was really the big news out of Asia overnight. But broadly, we saw a mixed picture across Asian assets. You did see currencies and bonds largely bid. There were a few big moves in commodities I'll come back to, and a mixed picture when it comes to the equity story. On the one hand, the Kospi in South Korea was higher, but Chinese equities fell about 1% as you're seeing more restrictive measures put into place to combat the spread of COVID-19. And Australian equities also fell after that RBA decision. As Anna said, they did abandon their yield target. They're bowing to market pressure on that front. But Philip Lowe, the governor, also said that it's likely going to take some time for inflation to get sustainably to their target. So that throws a little bit of cold water on the bets for aggressive tightening. As a result, we did see yields coming in Australia down 6 basis points on the 3-year to just under 95 basis points. The Australian dollar is also the big underperformer in G10, weaker against the US dollar by about 0.8%. And as for the moves in the commodity complex I was referring to, steel and iron ore really sinking today. Steel futures down about 4.5%, iron ore down by 6.5% as China really tries to rein in on steel production. As for the picture here in the U.S., we are coming off of record highs on the S&P 500 again, but it looks like we're struggling to keep the momentum going this morning with futures down a little more than 0.1% at this point. We go nowhere in the bond market ahead of tomorrow's Federal Reserve decision. Right now, the 10-year Treasury yield is unchanged, right around 155. Crude is essentially flat as well. WTI trading at 84.08 a barrel. And then just a quick check on Bitcoin. You are seeing a little bit of a lift, but it remains in the same range it's been in for some time, Matt, between $60,000 and $62,000 this morning at 61,600.
Yeah, it's a great point. And actually, Eddie Vanderveld is going to join us in a little bit from our MLive team to talk about that disappointment that we've had for Bitcoin ever since the ETF launched. I'm looking at a number of other assets here with the GMM across Europe. The reason I show you this today instead of the world map is just to highlight the sovereign bonds column. Look at all of this green. That means investors are buying a ton of bonds, especially in the belly of the curve, the 5 years, the 5 years, the 5 years, and the yields as a result are dropping. It's interesting to see this in Europe, and it'd be interesting to see if it carries across to the U.S. as well. By the way, we had U.S. manufacturing PMIs yesterday. They missed. Today we have European manufacturing PMIs. They're missing as well. 58.3. We were only looking for 58.5, so it's not a huge miss compared to the preliminary number, but it is a little bit disappointing. Let's take a look at some of the stock action. We have a mixed picture in terms of the regional indexes. The FTSE, for example, is losing ground today. The DAX is gaining ground. It equals out to pretty much a drop on the stock 600. Little change, about 0.25% down, but we have some big stories that are really interesting. BP is one of the huge ones. They blew away estimates for third quarter profit, like $3.25 billion compared to $3 billion even, compared to only $58 million in the same quarter last year. And they said they're going to buy back another $1.25 billion of shares. But the shares are off 2 2/3%. Maybe buy the rumor, sell the news, because they were up 2% yesterday. Stand chart is down, really disappointing investors with its outlook, saying that profit is going to remain little change this year, but that next year it's going to get back to growth of still only 5 to 7%. That's less bullish than a lot of its competitors, so Stand chart is down 7%. And then, well, this is Hilton Food Group, and I meant to show HelloFresh. I entered the wrong ticker, my mistake. HFGLN, as Anna knows, is Hilton Food Group, and HFGGY is the German-traded HelloFresh. You pointed it out, and you were correct. So I have the wrong ticker, but if you were to see the right ticker, you would see a 14% gain for HelloFresh. That's the company that sends out these meal kits. They were huge during the pandemic, during the lockdown, when everyone was having to cook at home. They're still big. They have massive growth. They're expecting full year growth of, I think, like 55 to 67% this year. They previously had forecast smaller growth. So analysts and investors are happy. Jeffrey says there's little not to like in these numbers, Anna.
Yes, I said I was going to fill in the gaps, but you knew it anyway, up by 14%, up by 13.93% for HelloFresh Group in Germany. Now we'll look at what lies ahead then for us today, team. We'll get earnings results from Pfizer at 6:45 a.m. New York time. Its shares are now below their August high. Of course, the rollout of booster jabs globally, to some extent, at least in developed markets, is a big focus. Uber rival Lyft will also report its earnings results after the US close. The company is expected to report strong numbers as users keep coming back after the pandemic-related slump. And COP climate talks continue. Joe Biden will announce that more than 90 nations have signed a joint US-EU pledge to collectively reduce global methane emissions by 2030. So a big focus on methane today, both domestically in the United States and also globally. More on that later. Now back to the markets, and the Reserve Bank of Australia has bowed to market pressure and abandoned its yield target. This is after an acceleration in inflation spurred traders to price in higher borrowing costs. Governor Lowe says the board is prepared, though, to be patient.
I recognise that some other central banks are raising rates, but our situation is different. The board will not increase the cash rate until inflation is sustainably in the target range. We are prepared to look through spikes in the inflation rate, as we have done with headline CPI inflation this year. For inflation to be sustainably in the target range, wages growth will have to be materially higher than it is now. This is likely to take time, and the board is prepared to be patient.
The board is prepared to be patient. Let's get to Bloomberg's Christine Aquino. She joins us now on set here in London. Christine, good morning to you. So what is the read across then from this shift in RBA policy? Because the market was testing the RBA, kind of assuming more hikes than now the RBA is prepared to acknowledge or really believes will be necessary. What are the broader implications of all of this?
Well, look, Anna, I think the RBA is the perfect encapsulation of the struggle that central banks the world over are going through, right? This is a central bank that has been dared by markets to go go the other way in terms of its loose policy, even though you could tell that they would really rather keep that policy loose because Australia, as a small open economy, is still very much vulnerable to how the world economy goes, especially with slowdown signs out of China, which is its biggest commodity customer.
Yeah.
But the markets have really pushed them towards this direction.
Well, let's talk about that commodity factor in this equation, because of course you have Australia, which is a major iron ore producer, and yet China is trying to cramp down on steel production, and iron ore prices therefore are plunging. How does that factor in here?
Well, absolutely, Kaylee, and this is why I think the RBA is really struggling to walk the line between a still dovish message, even though it abandoned its yield target, because precisely of these other factors that makes it really vulnerable, right? And I think this is going to make it difficult for them to walk that line moving forward, especially if this weakness in iron ore, its key export, continues, and signs of slowdown out of China also become more entrenched.
All right, Christine, thanks so much for joining us. Christine Aquino there helping cover markets for us at Bloomberg. Now let's cover politics. House Speaker Nancy Pelosi plans to push forward with a vote this week on President Biden's economic agenda legislation, despite moderates echoing Senator Joe Manchin's complaint about not knowing the full costs and economic impact. Senator Manchin spoke at the Capitol yesterday.
I will not support the reconciliation legislation without knowing how the bill will impact our debt and our economy and our country. And we won't know that until we work through the text.
Emily Wilkins, Bloomberg government reporter, joining us from D.C. And Emily, what's his concern? You know, $1.75 trillion, is his concern that it actually turns into $3 or $4 trillion down the line?
Well, at this point, it would be very difficult for the bill to grow that much in the amount of time left. But there are some major elements that Democrats are still figuring out here. Things like, what are they going to do with immigration? They need to find a policy that's acceptable to Democrats, but also can get through the process. Remember, this isn't normal legislation, so they can't pass everything through this bill. It has to have a direct impact on the U.S. either spending or how they raise revenue. Another huge question mark is drug pricing. Provisions are still being worked on. They're trying to get something in the package. The problem is that Democrats disagree about how expansive the U.S. should play a role in negotiating the prices of prescription drugs. And so that's still being discussed. And you've heard from Manchin and other moderates saying we need to know what these pieces are before we're ready to vote on a bill.
So that's the backdrop at the federal level. Emily, at the state level, we have gubernatorial elections in New Jersey and Virginia. And Virginia especially is looking quite tight. What is the national consequence of the result of those votes today?
So everyone always looks to Virginia to see what the midterms are going to then look like. Campaigns sort of use it as a dry run for their messaging, for what really resounds with voters. And this is definitely a race that everyone in the federal government is going to be keeping an eye on this evening. It is extremely close, despite the fact that President Biden won Virginia by more than 10% in 2020. We are seeing the Democratic nominee, Terry McAuliffe, really neck and neck with the Republican nominee, Glenn Youngkin. And this is going to test several things. It's going to test exactly how much of a role former President Trump is going to be playing in the upcoming midterms, if he can still really invigorate voters to turn out, and if a candidate like Youngkin can hold both Trump supporters and more moderates. For Terry McAuliffe, it's going to show what the messaging is and whether Democrats can really keep some of those suburban voters who previously voted Republican, switched to Democrats during the Trump administration, and now their future is a little more uncertain.
Okay, there's a lot at stake then, a lot of interest in these stories. We'll get further analysis of these governor races later on in the programme. Emily, thank you very much for joining us. Emily Wilkins of Bloomberg Government in Washington. Now, the World Leaders Summit of COP26 is well underway, and the world's third biggest emitter has made a pledge to reach net zero by 2070. Indian Prime Minister Narendra Modi laid out the steps to reach the goal.
2030 तक भारत By 2030, India will reduce the carbon intensity of its economy by 45%. And fifthly, by 2070, India will achieve the target of net zero emissions.
Bloomberg's Francine Lacroix is on the ground for us in Glasgow. How do we interpret what we've heard from Modi, the third biggest emitter then, Francine? Do we say it's not good enough, it's not 2050, or do we say this is India moving a long way?
Well, some people will say, look, and good morning, Anna. Some people will say, look, this is not good enough because we were hoping to have more net zero by 2050. Others will say, well, first of all, this is a step in the right direction. And if you speak to the scientists, and if India pulls this off, again, it's contingent on financing. They'll need trillions of dollars to get this through in terms of the transition. But if they do commit to that net zero by 2070 and deliver it, it helps in terms of science to reach that 1.5 degrees Celsius. So again, it's a step in the right direction, and it's the best we have. As you're saying, Anna, if we have the top 3 emitters, we didn't get anything from the US because he's really, the president, tied with domestic politics back home, and China didn't show up, and we also did not have anything in terms of new pledges from China.
We had Russia didn't show up either, and there was a great story on the Bloomberg yesterday talking about the amount of methane, and I'll say that again, methane leaking from Russian pipelines. How much is tackling methane now a priority?
I also call it methane. I have to say here in Glasgow, the Brits call it methane. So we can give them a pass just because they're hosting it, Matt. This is a huge deal. It's, you know, a lot of people say, look, it's low-hanging fruit because it's basically forcing the oil majors, it's basically forcing agriculture to plug a gap. So when methane escapes, you can plug a gap. I know it's costly, but it's one of the most efficient ways to reduce carbon emissions. Yesterday, what was surprising is, first of all, it was seen as a little bit of a fail at the G20 over in Rome. Now we understand that the US and the EU have put this proposal together. 90 countries are going to sign it through, including Brazil. Now, Brazil, we did see a reversal, even if the government in charge is climate denying, because they want to see themselves as more climate friendly ahead of the elections after they had a lot of pressure from voters and from businesses.
So some progress is being made. Thank you so much to Bloomberg's Francine Lacqua. And make sure you stay with us throughout this hour because Francine will be back later for an interview with the Bank of America CEO, Brian Moynihan. And then later on today, we'll hear from the president of the European Investment Bank. So don't miss those conversations here on Bloomberg. But let's quickly get back to the markets and take a look at some stocks moving in free market trading here in the U.S. And the major underperformer is Chegg, which of course is an online education company. It cut its revenue forecast, a slew of analyst downgrades as a result, and that stock is down 32% in early hours. It's a bit of a better story for Clorox, though, because of course at the height of the pandemic, all of us went out to buy Clorox wipes and other cleaning products.
Okay, traders, as you can see, position closed on Euro. Okay, all of you guys who traded yesterday, if you remember, we purchased long position on Euro at 115.73 as far as I remember. We moved to our stop for another position, and we hold it position at 115.73, but I ask you to place stop at the same level, 115.92. In our case, we have 1,000 pounds in profit. In your case, it's all about how much you decided to invest when you start trading this pair. Okay, guys, good start. I'll speak to you later. Let's move on. Let's see what other pairs, what profit will give us other pairs this morning or during this day. Okay, guys, stay safe.
Engine number one was able to do on the Exxon fight, it opened a lot of people's eyes to, I guess, the power that smaller investors can have. And I'm curious as to how other people can sort of look at what you did and use that is either a template or maybe just some sort of guide as to how they can sort of approach their relationships with other companies.
We founded the company in Engine Number One on the idea that we take the data, not ratings and rankings of ESG of the past, but we actually take the environmental, the climate, the social worker data, and we simply use it to look at the valuation of companies and look at it over a long period of time. And so if you think about it that way, you own these companies. Everybody that owns the company, whether you're a big institutional investor or you're a small retail investor, you own the company. You have a voice, you have a vote every year.
Yeah.
And so our approach is, is to use the vote and engage with these companies over time.
But that's always been the case. I mean, at least in theory.
This week on Bloomberg Television and Radio.
We are on the verge of a disaster.
Join us live from Glasgow for coverage of the COP26 Climate Change Conference.
People are beginning to build some momentum, I think. The question is, will it be enough?
We'll speak with global leaders, keep you up to date on progress and setbacks, and analyze what it all means to you.
We're going to need to see some real action.
COP26, the UN Climate Change Conference. This week on Bloomberg Television and Radio.
We have a situation right now where there's very, very strong demand. It's, of course, driven by consumer demand, first and foremost by American consumer demand, but certainly also strong demand in Europe. On top of that, we have very low inventories and around the supply chain. So our customers are doing two things at the same time. They're trying to meet strong consumer demand, but they're also trying to stock up to increase their inventories. And that's what's driving the very strong demand for transportation right now.
That was Søren Skou, the Maersk CEO, speaking to us earlier today about the shipping market, about the strong demand they're seeing for transportation at this time. Eddie van der Welt of our Bloomberg Markets Live team joins us now to think about normalization of supply chains. Eddie, good morning to you. So we heard him there talking about the strong demand picture. I actually asked him what he's looking for when it comes to signs of normalization. He chose to focus on port disruption and actually a shortage of labor there. And there we're not really seeing necessarily much normalization. But you found in markets there are signs.
I think we are starting to see some signs, right? We're seeing the chip lead times just not running up as fast as they had been for a while. And we're also seeing the Baltic Dry Index, which is a measure of shipping costs. That's come down significantly since mid-October. Even natural gas prices are starting to come down. And I think for me, the takeaway is that the people who run supply chains, they are smart and they adapt. And what we are seeing is there was this big shock. Now, they're starting to adapt. The question is the point that you make about labor, whether it is too late because the labor market is already being affected. Amazon has also talked about labor shortages and whether we are starting to see the wage costs rise. I think for me, that's the big question at this point.
Yeah, you know what? I thought that was one of the most interesting stories over the weekend, Eddie. John Deere, the famous tractor manufacturer, had been dealing with a strike. Its workers finally agreed to come back after getting a 10% increase, an $8,500 one-time bonus. They get 5% raises over the next 3 to 5 years. And this is kind of a sign. Economists in America are looking at this as the possibility that labor could finally be getting a step up over capital, so to speak. And I wonder if you're worried about a price wage spiral. I know we're not there yet, and people jump on me when I use that term, but are we laying the stones for a 70s style inflation?
You know what? I think it's really interesting. I love that John Deere story, by the way, because I grew up around tractors on a farm. But look, just aside, I think it's a really interesting story because, as you say, we are starting to see the wage costs rise in all of these industries, and workers are, they feel that like they have the ability to push for those wage increases. But the key thing for me is that we're seeing, jobs growth in the US slow at the same time as we are seeing very high demand for workers. And that tells me that workers have pricing power and that, and I think this is why the central bankers are behind the curve where markets are, that markets are a lot more bullish on inflation.
Okay, this is certainly a big story in the United States. Here in the UK, we heard from the OBR yesterday saying that labour markets might be alarmingly tight. Added complications in the UK context, of course. Eddie, thank you very much for joining us. Market Live teams, Eddie van der Welt with the latest on supply chains and labour markets. And for more market analysis, you can check MLIV Go. That is the function to use on your terminal. This is Bloomberg.
energy crisis, there's a lack of drivers. Is there anything that you need to ask authorities to do better, or that your clients want the UK to do better?
I think we're at a moment in time where we're coming out of the pandemic, and there are a handful of things going on. I think all over the world, there are labor issues that are really a reflection of this transition out of the pandemic. There are supply chain issues. Some of this stuff is transitory. There are some secular trends that we have to watch closely, but I think we're adjusting and dealing with it as anybody else is. And I think leaders here are thinking about it the same way leaders are around the world.
When you look at the UK and, of course, some of these green investments that the UK and the City of London particularly has been really trying to pitch, you've been extremely involved in carbon offsetting. Can London really spearhead that movement?
Well, I think it's important that governments around the world partner with the private sector to try to get capital directed toward innovation in a way that we can accelerate the climate transition. And I want to emphasize it's clearly a transition.
Today's CFOs are reshaping the C-suite, positioning companies to meet the next generation of challenges, breaking out of traditional roles to become Chief Future Officer. This week, find out how Harmeet Singh is spearheading Levi's investments in innovation.
As CFO, the one important thing is to ensure you're able to connect the dots and always think longer term.
Watch the world premiere of Chief Future Officer this Wednesday on Bloomberg.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Glines with Matt Miller in New York and Anna Edwards in London. Now let's get the first word news. And France has backed off its imminent threat to punish the UK in that dispute over fishing rights. President Emmanuel Macron says he will give negotiations more time. France accuses the British of unfairly restricting the access of French fishing boats in British waters. And Elon Musk says Tesla hasn't signed a contract with Hertz yet for that record order for electric cars. Last week, the rental car company said it would buy 100,000 Model 3 sedans for $4.2 billion. That sent shares of Tesla rocketing to a record high. In response to a tweet, Musk said there was no signed agreement and that Tesla would only sell the cars to Hertz for the same margin as to consumers. Coming up, we'll talk beyond Tesla and get back to the markets with Tatiana Puhan, TOBAM Deputy CIO. This is Bloomberg.
The 700th anniversary of Dante Alighieri's death has triggered the work of many institutions and offered a very rich schedule of events. Today in Santa Croce, we present one of these projects that suffered a difficult start because COVID-19 has stopped the project that was shared by the Opera di Santi Croce by the Franciscan community from Florence Municipality and the Fund for Religious Building of the Internal Minister. Today, Felice Limosani's project is finally enjoyable. In the Pazzi Chapel, the marvelous architecture by Filippo Brunelleschi, the most important images from the Divine Comedy created by the French illustrator Gustave Doré. Through these images, we can live the violent emotions of hell, the weight of purgatory, and the sublime joy of paradise.
The digital humanities are a cultural occasion to exploit. Summing up, it's about merging humanistic disciplines with new technologies. I find this to be an innovating and modern tool to update culture. Cultural heritage becomes something to hand over to the new generations and not to be put aside. So it's about using technology, pixels, and binary code with a human and humanizing content.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kaylee Lyons, both in New York. And Matt, European equity markets finding it heavy weather today, finding it difficult to make gains, but fairly flat to negative overall. The basic resources sector, the mining companies really suffering. Iron ore prices down for a fifth day.
I don't know if you remember this, this look. It's the not impressed from the gymnast, remember, from the Olympics? For me, it's not about equity markets as much today as it is about the bond markets. When I pull up the GMM and I see the sovereign bonds column, all the yields are dropping as investors are buying the debt, especially in the belly of the curve in the 5 years. And it makes me think, Anna, of what we were talking about this morning on Bloomberg Radio and London DAB Digital Radio, and that is we're seeing a real move in yields, especially at the front and in the belly of the curve in Europe. And we haven't seen that translate to the U.S. yet. If we do, it's going to be a real problem, as Van Rom points out on the MLive blog, for the Dow, because the Dow only yields 1.8%. So if U.S. yields start to creep higher, that's going to be a problem for Dow 36,000.
Yeah, it seems that markets have been confused over the last week or so about just what they think central banks are, or how much they think central banks are behind the curve. And we saw a rally up in some of those yields last week, and some of them coming down, as you rightly point out, Italy, France, Germany today. Kaylee, what are you seeing ahead of the U.S. business day?
Well, of course, we are coming off of record highs, both in Europe and the U.S., but we're losing a little bit of momentum. It may be just confusion about what central banks are doing, as you allude to, Anna. Of course, you had the RBA overnight. We have the Fed decision tomorrow. Tapering is basically baked in. The question is really going to be around the guidance. Do they taper faster because of inflation pressures? And does Jerome Powell really push back on the market that has pulled forward rate hike expectations? Or like the ECB last week, do they just kind of not push back really hard? And then, of course, we have the BOE decision coming up on Thursday. Now, as for where we stand today, Tuesday morning, stocks are really flat in Europe, and futures are flat as well when it comes to S&P E-minis. Right now, down about 2.25 points. In the bond market, not a lot of movement on the 10-year Treasury yield. We're at 155 on the 10-year. That is much lower than the range we had been in the mid-160s earlier, of course. And then I would point out that the curve is steepening for a second day. The 5s/30s spread now sitting back above 80 basis points. So a little bit of unwinding after that curve had flattened out to the flattest level going back to March of 2020. Now, as for some stocks moving in pre-market trading, a number related to EVs and clean energy. Of course, we talked about the Tesla story earlier. Elon Musk saying that deal with Hertz isn't signed yet for those 100,000 electric cars. So Tesla is down more than 5%. You have another EV maker, Lucid, down 4.4%. ChargePoint Holdings is also lower, as is Plug Power. They're down 2 and 1.5% respectively. Of course, a lot of these stocks had gotten big boost earlier on, about a week ago, as we saw the details of the infrastructure plan here in the U.S., the focus on clean energy and kind of that clean infrastructure and power stations. And of course, all of these play into the conversation at COP26. We know that progress is being made. Countries like Brazil signing on to that methane pledge between the U.S. and the EU. You also had India pledging carbon neutrality by 2070. Of course, that's a little bit later than other countries, but it is a very large emitter. So that is very important. And now we're going to head over to Glasgow, where Bloomberg's Francine Lacqua is standing by with a very important guest. She is joined by the Bank of America chairman and CEO. That is Brian Moynihan.
Kayleigh, thank you so much. Yes, we're here at COP26. It's day 2. We have pledges on methane. We also heard from India on that net zero pledge, and I'm delighted to be speaking to Brian Moynihan of Bank of America. Thank you for joining us. There's a lot of expectations on finance, what finance can do. Do you feel a lot of weight on your shoulders for corporations to do more and maybe fill the vacuum left by politicians?
Well, I think this is a transition, a just transition we all have to make as a consumer, as a company, your company, and everything you do, everything goes on around. And so there's a lot of pressure on banks because our clients are demanding this. Our investors are demanding this. The politicians, the world's demanding this. And so if you think about it in the context of the SDGs, in 2015, the United Nations, all the countries said, we want this to happen, sustainable development. And now we've got to implement it.
But when you look at some of what Wall Street and banks in general can do, could you stop lending to businesses that pollute too much?
Well, that's the great debate. But to help everybody make a transition, all our clients have to make a transition. Some of them extract minerals, some extract fossil fuels, and they're all making those commitments. And our job as a financial institution is to assess them on a risk basis, honestly. Here's my plan. Here's where I'm going to go. And that's hard for them. I mean, it's easy for a services firm to say I'm going to be net zero, but it's hard for them. And then we got to stay with them to help make that transition because they need capital to deploy. And so their plans, their declarations, and you're seeing it by many of them now, saying we're going to do this by this year, then we can be part of the measurement system because as we underwrite them, one of the risks we're underwriting is do they have a plan that meets the standards that the world wants them to have? And if they don't, they're going to have a problem financially down the road, and that's how we do it.
Do you see real commitment from a lot of your clients to actually also incorporate Scope 3? Because this is the big one, which is the hardest. If you're using steel, it's very difficult to make that steel green.
Yeah, it is, but everybody's got to remember everybody's Scope 3 is somebody else's Scope 1 and 2. So the analogy is if a car is going to be a net zero car, every part on it has to be net zero ultimately, and you push through the supply chain. So the commitments by the car manufacturers and other people will allow the steel industry to make the change. It is expensive for the steel industry to make the change, but if you think about in the overall context of the cost of something, it's not as high if everybody agrees we're going to help them make that change. And so that's the thing. And when we look at from a financed emissions, obviously the heaviest debate or the biggest bang for the buck, for lack of better terms. So that's where you have to concentrate on are they having a plan of following.
How many clients are resistant to change?
I really don't think people are. People understand it. People are trying to figure out how they take these wonderful companies and move them. And so with the SMI work we do, with the GFANS work we do, with the WEF climate leaders work we do, you just see more and more companies understanding we all have to make the change. And yes, there's leaders and there's some laggards. But one of the things about metrics and other things is you can bring everybody to a minimum standard. And it doesn't have to be the top. It's just everybody gets to minimum standard, moves from there.
But if you look at the amount of, and I don't know whether you see more change in the public or private sector, but when you look at the amount of ESG products or sustainable financing available, that was grown exponentially, but you still have emissions go up. So I'm not sure what needs to change for how you deploy capital to make emissions at least stop at this level.
Well, I think so. There's a lot of models and calculations about the 1.5 and what's going to happen. But I think one of the tricks is, and I hear the experts tell me, is they've never modeled this much commitment from the private sector, which spends all the money. So when you think about trying to implement this and the trillions of dollars a year it takes, the debate is, oh my gosh, what government, all of them running deficits from the pandemic, is going to have money to put on a table? And the answer is no. So the private sector, but if you think about us changing, how we operate, we have $120 million of energy use a year. We've been driving that to all renewable sources. You think about that across all the countries in the world, oh, geez, that's a lot of money. And then you have the offset market that develops from what we can't mitigate, and we can use that to move, especially in developing countries with a little bit of money has a big impact, reforestation and things that can help. So it's that net zero commitment by all sectors, including the governments as operators, to help do it. And then, people should understand that integrated business loop. If you're running a mid-sized company, at some point soon, the person you sell to in the supply chain is going to turn to you and say you have to be net zero. So our job as a bank is to educate them that's coming at them.
So where's the biggest opportunity for banks?
Well, we did $80 billion of financing last year, and it's a business. And so we have tax credits. We disclose in our 10Q the difference between our rate and our paid rate is all for wind, solar, and low and moderate income housing. It's $1 billion a quarter in tax credits. That's how big a business do. So there's lots of opportunity to make money doing this. And then we'll need concessional capital, and we do that too with some of the work we do and more of the charitable work and everything in between. But the thing that's hard for people to understand is this transition happens when we all work together to make it happen, and that's what's fun about this.
Are you disappointed that we don't have more commitments?
No, the governments can work a lot of ways. Simple mandates, simple enablement, permitting faster. There's a lot of things to do, and I think they're seeing, as the private sector is pushing them, before they were pushing the private sector more, you have to disclose, you scope 1, 2, 3, and the informal, the NGO type of disclosure and the government disclosure. Now we're pushing them saying, okay, we'll do that, but really we need you to enable it. So the multilateral development banks, take the political risk away, take some of the duration risk, take some of the currency risk, and you can unlock all this capital. And the other day in Rome with the G20, I said to the leaders, I said, judge an MDB not by the amount of money it puts to work, it's the amount of money it causes to be put to work. And if it unlocks 10 to 1 for the money, that'll be fantastic.
I mean, tomorrow we're expecting a big day for finance with a lot of commitments. I've been trying to get the number. I know everyone's very tight-lipped about how much we're going to get, but how does finance avoid greenwashing, given some of the pros also around, for example, some of the asset managers?
Well, so the view is there's a lot of definitions of that term, and so it can be a bad offset question. It can be just Larry Fink's talked about the idea that if I just divest from the ownership, that's in a way greenwashing. It's I just moved it to some else thing. So I think the way to do it is to have good standards, have government take more of the metrics and disclosure and offset validity question into more formal sectors. So like we have rating agencies across bonds across the world. You have to get rated. There's not enough capacity to deal with all the questions coming at these groups. So the government can help us with a formalistic structure there.
Brian, so we have 30,000 delegates in all, but 200 countries, many CEOs. We come here in Glasgow, we talk about climate change, but then we all go back home and we have to deal with supply chains, the energy crisis, inflationary pressure, volatile markets. Like, what do you worry about the most?
Well, I worry that people get in a position they don't move fast enough and recognize every move is a move in the right direction, and they start to get too worried about what could happen in 30 years and not what happens next week. And so with the SMI and His Royal Highness's work we do, His Royal Highness Prince Charles, the SMI, it's 300 CEOs, a coalition saying we're taking action tomorrow. So that a playbook for banks to become net zero, a MDB paper, a series of investments we're making. I just talked about one in the Caribbean where we're catalyzing across the Caribbean deployment of clean energy in multiple factors. The idea is that's my big worry is that people don't do something tomorrow, and everybody has to do something tomorrow.
Okay, but do you worry about inflation? Do you worry about normalizing monetary policy and the fact that actually if we have a taper tantrum, climate change is going to come second?
Well, I thought you were asking more about worry about climate change, not about the world. We worry about all those things from cybersecurity, inflation, and economy. But at the end of the day, the central banks of the world now have a task of pulling back, especially in Europe and the U.S., where the economies are bigger than they were back then nominally. They're still not on trend growth, but they're close. And, the unemployment's coming down, and so they need to withdraw. And I think the market's ready for it. They understand it. And yet we got to be careful that there's still an uneven impact. This war on the virus, we're winning finally with the vaccines and the treatments and everything, but it still has an uneven impact. So we got to be careful as we withdraw the stimulus that we still take care of the people who need it most. People haven't been able to get across the river, but large parts of the economy. We've seen our consumer spending and our demand and our usage and our line usage coming up. The companies' delinquency is an all-time low. The U.S. economy has recovered in pretty good shape. So the withdrawal has to be carefully crafted. So yes, do you worry about inflation getting out of hand or a too fast taper? All that stuff we worry about. But I think people are mindful. The good news is, just think about this. The good news is that we've got a serious activities about this virus, which was the cause of the problem. And that's behind us. Now it's just move forward from there. That's the very good news. The remarkable ability to produce the vaccines in such pace, to get them in people's arms at such pace. Now, there's other parts of the world don't have them yet, but in the big consumer-led economies, people can out and do things.
And you're feeling good about the economy? Are you able to get people back into the office? Like, is it back to normal?
We're about, normal would be too strong. We've got about half our people coming in, and every week we have more come in, and that's just by we only have vaccinated people coming in the office, so we have to get everybody vaccinated. And so this is one of the most intricately choreographed business moves ever, because it's just getting people back in and getting people back to work. But we just had our management team meeting, and all our people. In a few weeks we have our board offsite with 100 people there who are all in person and stuff. And so people are getting back to that. And I think when we get past that, we'll figure out what the right work situations are in the future. But right now, we just got to get people back to normal.
Brian, thank you so much for joining us today. Brian Moynihan there, the Bank of America Chairman and Chief Executive Officer. And I'm going to send it back to you. And of course, we'll have plenty more from Glasgow COP26.
Thanks very much, Francine. Francine Lacroix with the Bank of America Chairman, as she said, and CEO Brian Moynihan, saying there's lots of opportunity to make money on green efforts. Certainly that is part of the conversation over there in Glasgow. Let's get the political take on this. Julie Norman, lecturer in politics and international relations at University College London, joins us here in London. And Julie, we want to come to you on the sort of domestic politics in the United States in a moment. But first, as we've just heard there from COP26 and from Glasgow, I wonder how you view America's ability or willingness to lead on climate right now, because the US says it is back at the table, it is able to lead once again. But how do you compare their ability to lead with, say, the UK and the European Union?
Well, Anna, what we see is Biden really trying to come out as much as he can still as a supporter and a leader on climate change. He's really leaning into pushing climate priorities at the G20 and, of course, at COP, and doing what he can, and also really trying to indicate what he has been doing on the domestic side. He's not getting everything in that he wants, but he probably will get over $500 billion of investments in renewables into the spending package. He got electric vehicle funding into the infrastructure bill. So once those actually go through, he'll have some real successes that he can talk about.
Can you be a leader in climate change and still ask OPEC to pump more oil so that we can all buy cheaper gas?
Well, Matt, I think we're all aware of the situation right now of trying to balance these much loftier and really long-term goals of climate change around what are quite urgent needs around the energy crisis and pricing. And this is politics that's going to be playing out in every country, and Biden's not going to be alone in having to balance
But isn't
those
higher
things.
pricing must be a help? If you're worried about climate change, if you're worried about carbon emissions, the best thing is for the price at the pump to soar to the point where people don't want to drive as much.
Well, there's certainly some who will look at it that way. But I think for Biden, anytime you have rising gas prices, it's not good for consumers and it's not good for voters. So that's definitely not the way to get people on board with any part of your agenda, climate change or otherwise. So I think we'll be trying to see Biden balance that out as soon as he can as well.
Well, Julie, let's talk about those voters, because we have two pretty important gubernatorial elections today here in the U.S., in New Jersey and Virginia especially is looking very close. If Terry McAuliffe loses to Glenn Youngkin, is the blame going to be placed entirely on President Biden?
Well, there certainly will be blame on the Democrats. What Biden and McAuliffe are going into with today's election day is a situation where Biden's two signature pieces of his agenda are stuck by his own party in Congress. So this was really the last thing that McAuliffe wanted going into this race. He was ahead at the beginning. It's neck and neck now going into election day. So there were very few national wins that the Democrats and McAuliffe could point to. At the same time, it's an election where it's the first one in 5 years that Trump has not been either on the ballot or in the White House. And so we're also seeing that play out. There's less Democratic enthusiasm for coming out if there's not that anti-Trump sentiment, which is something Democrats have been trying to tap into and frame Youngkin in that way.
Well, and that would extend beyond Virginia, Julie. What are the implications for the midterms in 2022?
Well, that's certainly what we'll be looking at today in both Virginia and New Jersey as potential barometers and bellwethers for how the midterms might play out, with the usual caveats. I think it's important to say whichever direction Virginia in particular goes today, the midterms are going to be tough for Democrats. They have razor-thin majorities in both houses. We know that the incumbents party usually takes a hit during midterms. And again, the hits that Biden has been taking lately will probably influence that as well and carry over into next year.
Julie, thanks very much. Thanks for your time this morning and for being patient with us. Julie Norman, at University College London, lecturer in politics and international relations. Thanks very much to her for joining us. Coming up on the programme, we'll be back to the markets. Tatiana Puhan, Tobam Deputy CIO, will be speaking with us shortly about central banks and their policy decisions. Still to come this week. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller with Kaylee Lyons in New York, Anna Edwards with us out of London. I have been thinking a lot about Dow 36,000 over the past couple of days, especially in relation to yields when we all expect, well, I shouldn't say it that way, when the market is pricing in rate hikes for the major central banks. In fact, pricing in 2 rate hikes for the Fed before the end of 2022, or at least more than 1 is probably a better way to put it. In that case, doesn't 1.8% yield on the Dow start to look a little bit paltry? Joining us now is Tatiana Puhan. She is the Deputy CIO at Tobam. And what is your take on inflation, on rates, and how the bond market relates to stocks at these levels, Tatiana?
Yes, very clearly, I think we have reached a certain tipping point today. So if you look at the equity markets, what is very clear is that there's still a lot of hope priced in, a lot of growth expectations, and the very question is, whether this can stay in this way when we look at, what is going to come in terms of inflation that probably will last for longer, and also central banks that will eventually have to act on this. And so I very much join you in what you just said earlier. I've also been thinking a lot about this over the recent days, and so I have my doubts that equity market can stay there where they are today for much longer.
Okay, Tatiana, good morning to you. So which stocks look too expensive to you then if we continue to see the bond markets pricing in what they are pricing in?
Yeah, I do think so, but in particular in very specific sectors, and I think also for very particular companies, and this is also kind of joining what we've seen over the last couple of months or even years, what happened in markets, where you had a market concentration coming from the fact that investors focus on very specific themes and they hype them up a lot, and this is obviously due to certain growth fantasies that they had. And eventually, there's going to be some mean reversion, and the question is just, when is this mean reversion going to happen?
Can I ask you about energy businesses, Tatiana, and how you approach them at this point? Because do you think the market has a full understanding of how energy businesses in transition are going to perform here? I spoke to BP earlier on today, and they were talking about themselves as a greening company, so highly carbon intensive at this point, but transitioning to net zero. I wonder if the market really fully understands how willing it is to invest in those kinds of businesses and how we see those kinds of businesses with enough capital to transform.
Yeah, I think it's a very important topic, and we're actually spending also currently a lot of time discussing this with our investors, because there are like 2 schools. So there's one school that says, okay, let's just sort of take away all the capital from these guys, and sort of they're the bad guys, and let's just keep it in this way. And then there's another school that says, okay, let's help at least, or let's identify the candidates that can actually help us to make the transition happen, and to make the transition happen faster and maybe more easily, and certainly companies like BP, they're trying to position themselves in this way, and probably they are also in a good position, having very big research departments, so that they can actually help very actively in making this transition happen, and I think they do get actually a lot of pressure from their investors today, and this is also why actually you want to be in the driving seat as an investor of such a company, because you might want to put really a lot of pressure. Because if you look at the COP meeting today, it's good, if governments come together and they're talking about what to do and so on. But I think what is really important is what happens bottom up, what happens at the level of the companies, what happens at the level of investors, that we're all really putting our forces here and that we're, helping very immediately actually to move things forward.
Do you worry, though, that the effort toward decarbonization is going to weigh on global growth? I'm thinking of China specifically here.
Yeah, I think it could indeed actually weigh from global growth. But from my point of view, actually, the big question is whether we should worry that much about it, or whether we should also maybe, understand that what we've seen in terms of global growth over the last couple of decades, maybe this was not very, let's say, sustainable situation. And whether everyone should sort of reconsider his consumer behavior, spending behavior, whether we really need as much in consumer goods and so on, or whether a different approach could also be a good one. And so from that point of view, I think on the other hand, we also have to consider that if we're not acting now, it will also cost us a lot of growth, because we will have even more impact from natural disasters. We will have even more impact, from all the consequences that, a rise in temperature will actually have. And so, I think this is also something that people are not really considering if they tell us today, well, this is going to bring inflation, this is going to bring actually an impact, or this is going to have a negative impact on growth, because the alternative is also clearly going to have a very severe impact and even much more potentially.
All right, thank you so much for your insight today. That's Tatiana Puhan-Tobin, Deputy CIO. And now a quick look at what else we're watching today. I am watching the gubernatorial elections in New Jersey and Virginia, but specifically in my home state of Virginia. It's a very tight race between the Democrat Terry McAuliffe and the Republican Glenn Youngkin. And if McAuliffe does lose today, that does not bode well for the Democratic Party in the midterms in 2022, and probably has some implications for the Biden administration as President Biden's popularity is going down. Matt.
Yeah, well, I'm watching that as well very closely. I'm more focused on what's going on in New Jersey and the SALT deduction possibilities that Manchin seems to be hindering right now. But I'm also watching the supply chain. Eddie Vanderwalt was on earlier and pointed out that the Baltic Dry Index over the past few months has gone up and come back down. So we've seen some real softening there and some signs that the chip shortage is easing a little bit. So it's our big take today. Type in NI big take to read about stagflation and the possible end of the supply crisis.
Yeah, any signs of normalization there, really important. I'm watching methane. I'm sticking with that pronunciation, despite your protests, Matt Miller. I'm sure John Ferro in the next hour will back me up on this one. Important domestic news flow surrounding methane coming through from the United States, and internationally some collective action, so we'll watch that. More Bloomberg surveillance is ahead. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
seeing is just a reflection of continued uncertainty in the economy.
I think the markets are overly alarmed about inflation.
Inflation has been a difficult variable for any macroeconomist to get right, for any policymaker to get right.
This isn't a bond market that's telling us that disaster is ahead.
It's a risk-on environment for markets, right? And there's a lot more FOMO now.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Record highs into Tuesday. We're doing it again from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance live on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. Equity futures pretty flat this morning, TK, but once again, a three-day rally and a record high to start this morning.
Absolutely phenomenal markets. The interest here, John, is really rolling over. The Francisco Blanche calling $120 oil front and center. But I agree with you. It is about the equity markets, and it's about the linkage into the dynamics in the fixed income space.
It's about central bank decisions now, yes. Tom. The RBA behind us, the Bank of England, the Federal Reserve, very much in front of us.
Well, they are. I mean, the Federal Reserve is in front of us. That's going to be the one that matters. But I agree with you, John. It's a sum total effort. What do you do about the word that says September, which is transitory? Nothing's transitory this November.
The big question, Lisa, what comes next?
Yeah, and this is not just the issue of when the Fed starts tapering, which will probably be this week. It's not a question of when the Fed lifts off, but now it's a question of how many rate hikes there will be in this cycle. And if you take a look at new surveys, they're actually getting more aggressive with how many rate hikes the Fed will actually execute before the end of 2024, which I find interesting. What about this gives them a feeling that this will be more persistent than they previously thought?
Equity futures this morning totally unchanged as we set you up for a two-day meeting down in D.C. at the Federal Reserve. Here's the price action for you on the S&P 500. 3 days of gains into Tuesday, all-time highs. In the bond market, yields unchanged on 10s, 155. Euro dollar, just a break of 116 here at 115.96. We're negative there about 1/10%. And the focus on commodities, Tom, I've got crude at 83.94.
John, this is emotional. We don't have time right now to go into it to get to Jim Caron and Morgan Stanley. But, John, there's a cultural impact here. There's an emotion. When you see Paris wheat, which is European milling wheat with all that cultural heritage, go out to record highs, that gets your attention.
Can I just say that iron ore going the other way? Lisa, iron ore heading lower.
And this has to do with production over in China. They're producing less, therefore the demand is less. This goes to the sort of bifurcated nature of a market that is beset by supply chain issues, by ongoing disruptions from the pandemic. And we get another view into that throughout the day today. We're getting U.S. vehicle sales, which really has been one of the key moments that have been affected by all of these supply chain issues and chip shortages. We're going to be getting them. The expectation actually is for a slight increase to 12.8 million vehicles sold in the month of October. However, I am curious to see at what price. We have seen prices going up, which has actually dampened demand, and I do wonder how much that will continue, especially because if you hear all of these automakers, they're coming out and they're saying these supply chain disruptions are not going to end before the middle to end of next year. Also today, as you were mentioning, the two-day Federal Reserve meeting takes place in Washington, D.C. It commences tomorrow at 2 p.m. They do give their statement. The expectation is basically for a taper. Nobody cares. What they want to hear is what the indication is for when they raise rates. To me, I find it fascinating. We are now baking in, based on market expectations, more than 2 rate hikes in 2022. Just to give you a sense of how quickly this moved, people thought that it was absolutely a moonshot for the Federal Reserve to hike rates at all in 2022, as recently as just a few months ago. And today it is Election Day in the United States. The key focus will be on the gubernatorial race in Virginia, Terry McAuliffe versus Glenn Youngkin. Right now, if you look at predicted, actually they are predicting a Republican win. What does this do, John, for the Democratic agenda? Some people actually suspect it gives them some steam because people will actually capitulate and say, we better get something done now before the midterm elections where the Democrats look like they have a worse chance.
Terry Haynes of Pangea taking that view on things, Lisa. Looking forward to catching up with him a little bit later this morning. The stock to watch this morning is Tesla. It's down more than 5%. Tom, we have had a 50 percentage point move since the start of October. It's now a $1 trillion name. This from Elon Musk. And to be fair to Elon Musk, Tom, he's alluded to this point a couple of times. He's talked about the fact that Tesla has far more demand than production. What's interesting about what he said, though, in the last 24 hours, Tom, if this is based on Hertz, I'd like to emphasize that no contract has been signed yet.
Yeah.
That was Elon Musk out on Twitter.
Yeah, Doug Cass, I think, got to the point, as Doug Cass does. He says, is he allowed to say this stuff?
Well, he does, Tom, and it's having an impact.
Sorry, Doug's right.
The stock is down about 5% this morning. We'll pick up on some of the details around that story through this morning. I'm pleased to say that Jim Caron joins us now from Morgan Stanley Investment Management. Jim, let's just start right here. We've got the market priced for rate hikes next year. Is that in line with your view of how this is going to play out at the Fed?
Well, first of all, thank you for having me be leadoff batter today on your show. Look, I think the narrative on inflation is a little bit confused. We're talking about what inflation is today, and we know today it's high. Core PCE is high. We know it's going to probably be high in the first quarter. But what we're not talking about is where inflation is going to be in the second quarter, in the third quarter, and in the fourth quarter. The Fed needs to look forward, and the Fed will look forward. So I think the rate hikes are probably that are being priced over 2 rate hikes as Lisa was just discussing, I think is too many. I think, it could be 2. But the point here is that inflation is expected to fall off dramatically starting in the second quarter of next year because the year-over-year base effects are going to be very, very difficult to beat. And in the third quarter of next year and even in the fourth quarter of next year, inflation might be just over 2% on a core PCE measure. So to think that the Fed is going to be hiking rates aggressively into declining inflation, or what may be likely declining inflation, I think is a little bit of a stretch in terms of what the market is pricing at this point.
Jim, the zeitgeist, and I'm going to give credit to George Saravelis of Deutsche Bank off their foreign exchange desk, is a shift here, a subtle shift from transitory over to macro blather and all the Fed talk and that, over to VAR reality where people are losing money on bets placed previously. Is that what we're seeing?
We are seeing some of that. So there were a lot of curve steepeners that were in the market prior to the big flattening that we saw, and that certainly contributed to it. So I wouldn't cast that aside as nothing. I think that there has been a pretty big shift. And look, central banks have marked themselves to markets. They've become a lot more hawkish in terms of their overall tone. So I think the technicals did play a big factor, Tom.
Right now, we're taking a look at people bringing forward the number of rate hikes that the Federal Reserve will actually execute, not just the timing. And this is a shift. I wonder if this is accurately baked into the rest of the bond market, or if this is just sort of peripheral calls that are trading and not actually bets on the future.
So Lisa, I love your question. If the yield curve is talking, then is anybody listening? And the problem is that not that many other markets are listening, right? So what the yield curve is basically saying is that the Fed's going to bring, or central banks are going to bring rate hikes forward. The curve is going to flatten because the market is not willing to adjust higher the terminal Fed funds rate or the terminal central bank rate. So that means that we're still in a low rate environment from a Fed policy perspective, but we may bring some of these rate hikes forward. So what's happening in high yield spreads? Almost nothing. What's happening in investment grade spreads? Almost nothing. What's happening to equities? Equities are making new highs. So we could say that, well, maybe these markets have it wrong somewhat at this point, but as far as I can say, if a yield curve falls in the woods, is anybody listening? And the yield curve has been falling and nobody else has been listening. And I think this is a very, very critical message in and of itself. This is information too. When you bring rate hikes forward because we're responding to supply shocks that today has inflation higher, doesn't mean that inflation will necessarily be higher and continue to grow. Remember, inflation is the growth rate of prices. We may not be having this at this time next year. So therefore, the market's unwilling to raise the terminal Fed funds rate or the terminal central bank rate. Yeah. So therefore, long end yields, intermediate term yields, or mainly 10-year yields aren't really changing all that much, and 30-year long bond yields have actually been falling. So it is pretty curious right now.
Jim, what do you do then as an investor with this? I mean, basically, do you bet that the market is wrong, and do you sell high yield debt? Do you sell riskier assets?
Yeah, so the answer is not us at Morgan Stanley Investment Management. We still like high yield because the point is that the central bank is going to raise rates, but they're not trying to tighten financial conditions. They still want to keep financial conditions easy, to expand the economic cycle, to continue with growth, to continue to push down the unemployment rate. It's a broad and inclusive goal for the Fed to get all demographics to participate in this expansion. And I think that's exactly what's taking place here. So So the Fed is not trying to kill the expansion. They're trying to extend it, but they may have to address the near-term pressures of inflation with a rate hike or two, and that could be in 2022, but it doesn't mean that they're shifting their terminal rate a lot higher. And if they do, the terminal rate's 2.5%, by the way, as based on the Fed forecasts. If the terminal rate goes from 2.5% to 3%, based on our calculations, the 10-year yield would be somewhere around 2.15%. We're not expecting that anytime soon, but the point here is that the terminal rate matters a lot, and the market is not willing to shift higher to longer-term rate hikes.
Hey, Jim, good to catch up. As always, buddy. Jim Caron there of Morgan Stanley Investment Management. Your 10-year this morning, about 155, yields in a single basis point on the equity market in the next hour. Looking forward to catching up with Anna Han of Wells Fargo on their new bullishness, Tom, in this equity market. Let's call it new bullishness because they weren't so bullish earlier in the year.
They weren't. There's been some shifts here, and I'm seeing some SPX, with earnings coming in. I'm seeing some adjustments, John. But you come to a point where people have this huge, massive ambiguity. If rates go up, does that signal a prosperous economy for equity profit?
Depends why rates are going up, Tom. If it's just about inflation and not about growth, we've got a problem, right?
Yeah, okay, I'll go with that. But the bottom line is how much up and the rate of change of up is conducive for good equity investment. And, not that that's going to come up in Chairman Powell's press conference, but I'm sorry, look at the equity market, up it goes.
No one wants my view. Lisa, Morgan Stanley, enjoy the treat for now, but beware the trick and manage your risk accordingly.
A lot of this has to do with the rate picture, too, the idea that rates are going up.
John, I talked to Antonio yesterday.
I knew it.
The move
from
Italy to Chelsea.
I was going to ask you.
Well,
Didn't have to.
Think about what he did when he moved from Italy to Chelsea.
Did you interview for the job at Spurs?
No, I did not.
Is that why you were away yesterday?
I talked to him, and he's got to help their midfield. I mean, he was the real deal.
He is the real deal.
Yeah.
Fantastic manager. Equity futures down 1/10%, more on a North London football club that Tom seems to love.
No, we can wait.
And an Italian manager that seems to be taking over, Antonio Conte. Who thought you'd tune into Bloomberg Surveillance for that 10 years ago, Tom? But here we are. Futures -5.
10 years ago, Tottenham had a midfield.
This is Bloomberg.
With the First Word News, I'm Laura Wright. House Speaker Nancy Pelosi plans to push forward with plans to vote this week on President Biden's economic agenda legislation. She's getting pushback from moderates who want a detailed analysis of the full cost and economic impact. That echoes complaints from Democratic Senator Joe Manchin. He says Congress needs more time to assess the bills. The Biden administration is launching an assault on methane today. It wants to keep the heat-trapping gas from escaping landfills, oil wells, and farms. The U.S. says more than 90 nations have signed onto the joint initiative with the EU to cut methane emissions 30% by 2030. President Biden calls methane cuts the most effective strategy for slowing global warming in the near term. France has backed its imminent threat to punish the UK in that dispute over fishing rights. President Emmanuel Macron says he will give negotiations more time. France accuses the British of unfairly restricting the access of French fishing boats in British waters. Prime Minister Boris Johnson's office says he welcomes the French move. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Laura Wright. This is Bloomberg.
there's a big difference compared to other search engines. We use the money to plant trees all over the world where they're needed most.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
How much stress is there at the moment amongst the asset managers that actually some of the ESG labeled products, then if you probe, are not green?
Well, look, there is some stress, and it's great that there's that scrutiny, and there's that skepticism or healthy skepticism about ESG labels or sustainable labels. And that, again, is one of the reasons we're having this ruthless, relentless focus on net zero, because in the end, look, we can't stabilize the climate unless we get to net zero. And it's as simple, these are hard numbers. Your emissions are either A or B, they're going up or down. And if they're going down, are they going down consistent with the science? We anchor it in the science, the same science the UN and others use for the 1.5 degree objectives.
Should this not be compulsory? Should we not have regulators coming in and saying, look, this is a new definition, you stick by it, and we're going to measure it?
So I think it's a great question. So let's look at what happened with TCFD, climate disclosure. 6 years ago, you and I were in Paris. We talked about this. We talked about other things. Now that's moving to become mandatory.
This week on Bloomberg Television and Radio.
We are on the verge of a disaster.
Join us live from Glasgow for coverage of the COP26 Climate Change Conference.
People are beginning to build some momentum, I think. The question is, will it be enough?
We'll speak with global leaders, keep you up to date on progress and setbacks, and analyze what it all means to you.
We're going to need to see some real action.
COP26, the UN Climate Change Conference. This week on Bloomberg Television and Radio.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
I will not support the reconciliation legislation without knowing how the bill will impact our debt and our economy and our country. And we won't know that until we work through the text.
Senator Joe Manchin, the Democrat from West Virginia, holding things up a little bit this week. From New York City this morning, good morning. Tom Keene, Lisa Bravitz and Jonathan Ferro. Your equity market shaping up as follows. Down 4 on the S&P 500, negative about 0.1%. 3 days of gains into Tuesday, all-time highs, and nicely through 4,600 as we start another trading day. In the bond market, yields unchanged, 154.88. That's the 10-year. The Fed decision comes tomorrow. We've got to deal with the politics first. Senator Manchin, Tom, saying holding this bill hostage is not going to work in getting my support for the reconciliation package.
Yeah, there could be a 1-hour conversation here. I mean, the politics here, and particularly the politics that the president comes home to, is going to be absolutely extraordinary. Joining us now, and we're really thrilled she could be with us, and we're going to take a moment here. In the arc of this pandemic over 18 months, there's moments where a nation stops, and to have Mrs. Kenneth Walker III join us this morning from Washington. Emily, wonderful to have you here. That was truly one of the most extraordinary games. John watched it, I watched it, Lisa watched it, but you lived it as a Spartan. What was it like to see East Lansing outlast Ann Arbor?
Like many Spartan games, it was basically just being nervous for most of the game until the very last minute, in which you suddenly realized that we had it and we were actually going to win. So it was very exciting. You missed it yesterday, Tom. I was rocking the Spartan green, but I had to switch up the color palette a little bit this morning.
Well, they switched it up this morning. Emily, thank you. And it's just a joy to see that. It's a joy also to have the president come home. What's he come home to?
Well, he's coming home to a Democratic Party that still is struggling to pass his signature pieces of policy legislation. You just played that clip from Senator Manchin, but over in the House, Speaker Nancy Pelosi says that they are on course, to continue passing both bills, both that social tax plan as well as the bipartisan infrastructure plan this week. It's what Democrats are hoping to do. You talk to progressives and they say, look, this is in President Biden's hands right now, putting a lot of of pressure on the president, saying if Biden can come to them and guarantee that he'll be able to get Manchin and Senator Kyrsten Sinema to go along with him, then progressives are okay moving forward with those two pieces of legislation, whether or not Senator Manchin gives a verbal yes or no.
Emily, how much does the outcome of the gubernatorial race in Virginia matter for the infrastructure bill heading into the end of the week vote?
There definitely is some impact there. I mean, Democrats are very cognizant right now that President Biden's poll numbers approval rating has fallen. They're cognizant that they face a very difficult midterm for both historical reasons and because of how states are redrawing congressional district lines. And for Democrats, sort of the one bright spot here is that they currently control the House, the Senate, and the White House, and they can move this big piece of policy legislation, which they can then run on. And so it is important to get that done. And I think right now, Democrats are right now to have this race as close as it is, to have some Terry McAuliffe pulls off a win tonight. I mean, Virginia is a state that President Biden won by 10 percentage points. And right now, to have this race as close as it is, to have some analysts actually saying that it's more likely that Republican nominee Glenn Youngkin will win, this is something Democrats are really going to have to reckon with in how they message and how they talk to voters and how they go forward into the midterms.
How much is this just really ultimately going to come out to turnout?
All elections, Lisa, definitely come out to turnout, and that's something we're going to be watching closely. I think one big question is did Terry McAuliffe successfully energize some Democrats who, usually don't vote in the midterms to come out and vote? Can those same Democrats get out there? We're really paying attention to the suburban voters. Those are ones who really supported Republicans before President Trump came along and then switched to Democrats. Question is, what do they do now that Trump is no longer on the ballot? And of course, for Republicans, trying to see if Glenn Youngkin can form an alliance between hardcore Trump supporters as well as more moderate Republicans who really didn't support the party that much when Trump was the head of it.
Has the former president been overt in his support of the gentleman from Carlisle?
Well, President Trump did give Youngkin his endorsement, which Youngkin acknowledged, but he's also sort of kept him at arm's length. You didn't see President Trump physically in the state of Virginia campaigning for Glenn Youngkin. He did a telephone town hall last night, but Youngkin wasn't there on the line with him. This is sort of this balancing act that Glenn Youngkin is doing right now that Republicans in similar swing states might seek to emulate. How do you make sure that you're not completely isolating from Trump, but that you're also making sure that Trump supporters support you?
A segue here, if I can, Emily, and we can do this with you. If there's one item that the president can bring back from Glasgow, one single little thread that Congress can agree on, does that exist?
Yes. I mean, you do see Democrats acknowledge the fact that climate change is something they want to address. They know that it's something that's important to their base. I think the question is all, how do you do it? And how do you do it so you can keep the senator from West Virginia, of all states, on board with you? And I think you're seeing some of that today in the methane regulations that the President Biden has announced, sort of walking that fine line, addressing leaks of methane, but not going so far as to ban practices like flaming, that's sometimes used for these methane emissions.
Emily, thank you. Emily Wilkins. Tom, I've got to do this. Glasgow. You've got this. We're going to have a couple of weeks of this.
I know.
Can we get it right?
I'm
just listening to U.S. broadcasting over the last 24 hours has been
I've
deadly.
I've been practicing.
I like how you say Moscow, too. It's Glasgow.
Okay.
Glasgow. You've got it.
I slipped there, John.
I saw our friends at CNN turn up at Edinburgh, confused maybe that the event was in Glasgow.
Yeah.
Not in Edinburgh. But okay.
Glasgow.
Do you want to explain the Michigan football reference too?
Yeah.
To translate that.
For the international audience, there's sports moments in America as in any country where time stops, and that's what happened Saturday. It's Michigan. It is a culture of two different schools, John, and they're really, really quite different, both outstanding academics. But what was great is you didn't want the game to end, John. I mean, it was just so graceful And it was nice, John, frankly, maybe like Crystal Palace. It was in
just like
a smaller stadium. No, it was in a smaller, it wasn't in some mega corporate stadium like what the Tots have. It was in a smaller, more collegiate 60,000 stand stadium.
Spartans beat Wolverine.
On grass, I think
37-33.
Yeah.
Let's move on from this. Time will stop a little bit later in Virginia. Lisa, that's the focus, politically speaking, here in America.
And the reason why is because it sets us up for the midterm elections. What I think is really interesting is Terry Haynes from Pangea, who will be joining us in less than an hour. He thinks that it actually will push forward the Democratic agenda because it kind of makes people come to the table. It's now or never. They have a limited amount of time if the midterm elections are called into question.
To get something done. How quickly can they get something done this week? Equity futures down 2 or 3 on the S&P. We're negative about 0.1% on the S&P 500. All-time highs coming into today. There's a lift in this equity market. Buoyant, resilient. Lisa called it a Teflon equity market
yesterday. No, I did not. You called it Teflon.
I asked if it was.
And I said people could call it Teflon. Okay. And then now it's me.
Okay.
It's my fault.
So no one's calling it a Teflon market.
You know, people could say it was a Teflon market.
There we go. That's smart. That's smart.
I try.
Go on, Tom.
The VIX has not come in. I think that's important.
154.
16.52.
88 on 10s. 154.70 rather. From New York, this is Bloomberg.
China is a gigantic part of our economic life and will be for a long time, for our lifetimes. But that does not mean that we should be naive in the way that we look at our critical national infrastructure, the way we look at, you mentioned nuclear power, you mentioned 5G technology. Those are all legitimate concerns that any government, many other governments around the world have. But I've said this many times, it's worth repeating, I am no Sinophobe, very far from it. I think.
Do you think you're the last Sinophile in the cabinet?
No, I expect there are lots of... look, China is a great country and civilization.
What about wind power? Would you let them buy offshore wind power? That's infrastructure.
I think you'd have to
railways.
You'd have to look at you'd have to look at what was you're defining as strategic or critical.
Today's CFOs are reshaping the C-suite, positioning companies to meet the next generation of challenges, breaking out of traditional roles to become Chief Future Officer. This week, find out how Harmeet Singh is spearheading Levi's investments in innovation.
As CFO, the one important thing is to ensure you're able to connect the dots and always think longer term.
Watch the world premiere of Chief Future Officer this Wednesday on Bloomberg. Wednesday, Bloomberg surveillance, the Fed decides. Will the Fed finally announce a date to start a taper? And how long will it last? Will they still view inflation as transitory? Find out Wednesday starting at 1:30 p.m. Eastern on Bloomberg.
Equity futures down 4 on the S&P 500 from New York this morning. Good morning. We pulled back just a little bit. Nasdaq futures down 0.2%. The Russell, the small caps doing okay. A little lift there, up about 1/10. All-time highs as the Federal Reserve two-day meeting kicks off today. Australia happened overnight. Switch up the board and get to the twos. The front end of the curve in Australia, in the US and the UK. This is going to be the focus as the week progresses. The Fed tomorrow, the Bank of England on Thursday. Let's start with Australia. Throwing in the towel on yield curve control. They were targeting 0.1% at the front end of the curve. The market had already made its mind up about that. The RBA was just confirming it. 72 basis points to the front end. It's onto the front end of the US curve. In and around 50 basis points. There's been a real repricing here. We've more than doubled since the Fed last met on September 22nd. And on the 2-year gilt yield, we've had a massive move there. Explosive. And I think it's okay to call it explosive, Tom, as the Bank of England encourages that move ahead of Thursday. The Federal Reserve, not much encouragement. It's about whether we get some pushback.
Yeah, John, let's pause here because this is so important, and I don't think we've got the guests lined up for it today. The first derivative of the movement of yields in Europe is really quite steep. Why is that, John?
We've gone from 0 to 70, Tom, in Australia. 0 to 70.
What's part
just
of
like
Europe?
that. The reason I mention that, Tom, is because it's not just Europe, it's not just the US, it's global. It's been a massive move at the front end all over the place. Some people have encouraged it, some people have validated it, and that's what I'm trying to explain here. Australia have validated the move. The Bank of England, Tom, have encouraged the move. The Federal Reserve hasn't done much yet.
Yes.
Now, if we don't get pushback, the market will see it as encouragement, and the ECB experienced that last week. So let's finish on this, what it means for the currency. Better to travel, maybe, than to arrive for the currency at the moment. Bit of pushback on rates. Governor Lowe over at the RBA has said that we may not hike interest rates through 2024. I think he's open to 23, but ultimately this comes down to the trajectory of inflation down under and up here in the United States of America. The Aussie's weaker on the session, Tom. It's down about 0.8%. But tomorrow at the Federal Reserve, it's all about two things. Tell me what's next, give me a view on inflation, and it's about how the latter informs the former. That's the focus going into tomorrow.
I like you got the Australian lingo down, the down under thing. Okay.
Do you like that?
Yeah.
Spend a bit of time down under, Tom.
That's very good. I do. Timing policy mistake morning. Let's move on right now. Frances Donald joins us with Manulife, and she's written an important essay on all this talk about policy mistake. Let's fold it into the word transitory, a transitory policy mistake. When a central bank screws up, Frances, what do?
Well, it depends who they are, but traditionally they have pivoted back. And I think this is what the market is expecting with those flattening curves, is that we're going to see central bankers who maybe get a little bit too excited, validating those front end moves, and you see those longer ends start to move down. And this to me is really saying that the market, and I think a lot of economists, including myself, see that in 2022, growth and inflation slows pretty heavily. And in that environment, central banks won't just want to pivot, they'll have to pivot back towards a more dovish language. Hopefully that means a curve re-steepening. The challenge is we got to traverse some challenging curve flatteners, some challenging types of economic environments before we see the whites in their eyes.
So the 20-year yield is now higher than the 30-year yield. It's an inverted yield in the 20s-30 spread. I don't believe I've ever mentioned that on air before. Lisa mentions that daily, folks, but that's another world. Frances, the Fed can control how far out the curve, and if they can only control so far out, why do they care what the farther out curve does?
Well, the 20s, 30s to me is less of an economic signal and more of a technical development that's happening there. But what you should be watching is that 2-year versus the 30-year. No, the Fed cannot control that 30-year yield, but that 30-year yield still has a lot of information about where we're going. Long-term growth potential is embedded in the long end of that curve. And the story we're seeing now in that long end is that no, despite what we believed would be game-changing fiscal stimulus, We haven't checked that box, particularly in the last few weeks. Remember average inflation targeting? That was supposed to be a big deal, Tom. We were supposed to be in a regime change where the Fed let things run hot, or the idea that COVID was going to produce massive productivity gains. Well, turns out we have instead a major labor shortage, which is not giving us a productivity gain, in fact, the opposite. So what that long end is telling us is that the escape velocity, game-changing growth that we thought we were going to burst out of in the Build Back Better post-COVID regime, we aren't just not getting that, we're probably getting the opposite.
Francis, you've got a fascinating forward look here. Let's sum it up. You're talking about growth slowing next year, inflation slowing next year, and the possibility that the Fed has to flip once and then flip again. I'm just wondering how that stacks up with your view on risk assets, equities more broadly. What's the outlook look like?
Well, when we're constructing asset allocation portfolios, what we see is a Fed that cannot hike in 2022, and actually a lot of global central banks that are either going to have to pivot back to a more dovish stance or even reverse rate hikes in the next 5 years. So in that environment, yes, I'm happy to be adding back to cyclical trades, but until we get there, until I can add back to risk, I have to make sure that the central bankers are not going to commit more of a policy mistake going into 2022. I don't think that happens to Powell this week. He's still got half the FOMC who sees a 2022 rate hike. The data is still okay. Inflationary pressures are still hot. And dare we say, getting more and more political, this is probably not the week. And that's why it gets a little bit choppier as we head into 2022. I think we're in that bad news is bad news phase. We have to get back to bad news is good news in order to see adding back to risk assets. That probably only happens in early 2022.
Francis, just to highlight your position, are you saying that bond markets are wrong and that equity markets, risk assets, are more right when it comes to the outlook going forward?
No, I don't subscribe to a market being right or wrong. I think markets are telling us the right story, which is that right now central banks are too hawkish, but in the long term, there's still a huge amount of liquidity in the system. And if you're looking at 5-year return forecasts, then being in fixed income just doesn't make the same amount of sense as being in equities, particularly broad ones. What we have to pay attention to, though, is what is the next move in the yield curve? And in order to get a re-steepening, we have to see the policy pivot. But policy pivots are impossible for me to forecast. I don't have a model that tells me what's going on in Powell's head. I definitely don't have a model that tells me who's going to be running the Fed in 2022. I mean, I'm looking at betting markets. I wasn't raised to do economics by looking at betting markets to tell me who's going to be doing the Fed. So there's this huge amount of uncertainty as to the when we see a policy pivot. And of course, I might be wrong that we don't get one, in which case we're talking about a much more difficult outlook as that curve continues to steepen and our inbox are full of all those yield curves equal recessions types of stories.
Francis, you're not alone at looking at predictive pages to figure out whether Jay Powell will remain the chair of the Federal Reserve come next year. I do wonder, though, what a different Fed chair, possibly Lael Brainard, would actually do to the potential stance of a Federal Reserve when governments generally want a central bank that is dovish.
You know, most of the time we would say, don't pay attention to who's running the Fed, focus on the data, except that right now the outlook for the Fed is very binary. Does the Fed focus on the inflation side, which, by the way, I don't think they're going to be very successful at taming, even if they do get hawkish, in which case we're talking about more curve flatteners in a shortened cycle? Or does the Fed say, you know what, that labor force participation rate, one of the most important data points out there right now, is still really suppressed. Our job market is still dysfunctional in many ways. We have to allow the overheat and reconvince the market of average inflation targeting. Now, Lael Brainard seems better, more in that latter camp. And so when we're in this very stark binary type of outcome, then yes, who's running the Fed will matter more than it has historically.
Is this traditional economics? I mean, do they have a foundation to work on right now?
No, because, you know, we've talked about this for the last almost 2 years. We don't have a lot of economics that helps us deal with COVID. And yes, COVID is still a big issue. I don't have a model that tells me how long COVID zero policies are going to be ongoing in China. I don't have a model for who's going to be running the Fed. I actually don't have a lot of historical data that tells me how to deal with supply chain disruptions. A lot of our supply chain disruption forecasts are actually based on survey data, or what economists call soft data. It makes us a little uncomfortable. because it's based on opinions. So there's a lot of data out there that we're going to call known unknowns that create a really challenging 2022. I'm writing my 2022 forecast right now, and the title of it
please give us a
2022.
forward look on that. Come on, we got to make some news this morning.
I'll tell you, my 2022 forecast is called the anti-forecast, because for the first time, I think it's really critical that we acknowledge just the extent of uncertainty in 2022. And I don't book a lot of interviews by saying we're not sure what's going to happen. That's not a great way
Well, you're
to
known
get
for
views.
it.
But there is a really important moment here where we acknowledge uncertainty as a proper risk management tool and just how binary the central bank outlook is.
Francis, I love that. I'm looking forward to reading it. When does it come out?
Soon. I'm getting to work.
Soon.
Okay. Francis Donald of Manulife. Were you raised on betting, Tom? On the betting office? We had a bookies on every street corner in my town, Tom. Were you raised on betting?
No. We do it very different in America.
You didn't have the sports book in the same way?
No. That's all really recent in America.
Standing on the corners?
Every street corner you have a bookies. Yeah, sure.
Really?
I mean, you bet if the kids can all
People would be
cross the street
outside
at the
having a
same
cigarette
time.
and then they,
walk by.
You could smoke inside at that point too.
Yeah.
Yeah, and then the high-frequency gambling fruit machines got involved.
John,
good stuff.
And speaking of betting, we could bet on whether the Tots have a team this weekend or whenever
I
they
think they're
play.
going to have a team, Tom.
Yeah,
Interested to see if Antonio Conte's in the dugout this weekend.
Did you see the uproar out there among all of our fans about you and me at White Hart Lane?
Oh, Tom, we got to make it happen.
I mean,
we got to make it happen.
People are putting videos together.
I've got a plan for us.
I teared up. I was emotional.
I'm going to reach out to Conte's team once it gets finalized.
Well, I talked to David yesterday, and he's a little busy, but
What did he say?
He said he's got to wrap this thing up fast. I mean,
I like how you left the second name off
John,
David, just in case David's watching and he's wondering if he did actually
John,
speak to you yesterday.
seriously, what in God's name do they do with Harry Kane? Seriously.
I think, look, there's one man who can get the best out of Harry Kane. No, look at Romelu Lukaku, Tom. Lukaku at Chelsea, when he was at Inter, he was one heck of a player, and that was down to Antonio Conte. I think Conte can get the most out of Harry Kane. That's my opinion, for whatever that's worth.
I value it.
Spurs fans everywhere value that opinion, Tom.
They do.
I know. Tom Keane.
John, the VIX is 16.50. It ought to be at 14.
I missed you yesterday. I wondered where you were. You still haven't told me where you were.
I was on the phone. I mean, basically, we had an open line to the Tots, and we were talking all day.
Okay. Futures a little softer. Your bond market unchanged. 155 on 10s. Equity futures down not even 0.1%. All-time highs through the week. Once again, Monday into Tuesday from New York. This is Bloomberg.
With the First Word News, I'm Laura Wright. Today's election for governor in Virginia will offer the clearest picture yet of how much momentum Republicans will have in the 2022 vote for Congress. GOP candidate Glenn Youngkin is backed by Donald Trump, and polls show he's in a virtual dead heat with Democrat Terry McAuliffe. McAuliffe is betting that the former president's legacy will turn out Democratic voters. Hong Kong is tightening what is already one of the world's strictest coronavirus policies. It will end quarantine exemptions for senior executives, bankers, and most other groups starting November 12th. Hong Kong hasn't had a local outbreak of the coronavirus since early June. Shares of Tesla are falling. Elon Musk says the company hasn't signed a contract with Hertz yet for that record order for electric cars. Last week, the rental car company said it would buy 100,000 Model 3 sedans for $4.2 billion. That sent shares of Tesla rocketing to a record high. But Musk tweeted there was no signed agreement and that Tesla would only sell cars to Hertz for the same margin as to consumers. Chemical company DuPont has agreed to buy engineering materials technology maker Rogers. The price, $5.2 billion. That represents a 33% premium over yesterday's closing price. Rogers develops advanced electronic materials used in electric vehicles. BP will use the proceeds of surging energy prices to woo investors who are disenchanted with oil and gas. The company will buy back another $1.25 billion in shares. The announcement came as BP reported a big increase in third-quarter earnings from a year earlier. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Engine Number One was able to do on the Exxon fight, it opened a lot of people's eyes to, I guess, the power that smaller investors can have. And I'm curious as to how other people can sort of look at what you did and use that is either a template or maybe just some sort of guide as to how they can sort of approach their relationships with other companies.
We founded the company in Engine Number One on the idea that we take the data, not ratings and rankings of ESG of the past, but we actually take the environmental, the climate, the social, worker data, and we simply use it to look at the valuation of companies and look at it over a long period of time. And so if you think about it that way, you own these companies. Everybody that owns the company, whether you're a big institutional investor or you're a small retail investor, you own the company. You have a voice, you have a vote every year.
Yeah.
And so our approach is to use the vote and engage with these companies over time.
But that's always been the case. I mean, at least in theory.
From New York City.
We're in London, in Sydney, in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
This is Bloomberg Daybreak with Lee.
Balance of Power on Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. And this is Bloomberg Green.
To recap the headlines.
You do not want to miss this story.
Really good news on the jobless claims
How
front.
are you thinking about those dynamics?
You talk about hiring aggressively at the moment. Can you walk me through how challenging that is at the moment? How difficult is it to find the right people?
Well, things have changed. Again, the world has changed under the pandemic, and you all know worldwide, you know, what the challenges with getting people back into the workforce.
Well, it's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
There are a number of jobs where people can really make other people sick. I mean, healthcare workers can make their patients sick. That goes for, I think, the police, firefighters. I think it's totally appropriate for there to be a requirement.
That's one opinion. That was Dr. Joshua Shafstein there of Johns Hopkins Bloomberg School of Public Health. From New York City this morning, good morning. Tom Keene, Lisa Bravitz and Jonathan Ferro counting it down to a Fed decision tomorrow. That two-day Fed meeting begins today. Your equity market unchanged on the S&P 500, unchanged, all-time highs to the close on Monday. Into the bond market, yields unchanged at 155 on 10s. Into the commodity market, just a bit softer, lighter, lower, negative 0.2%, 83.87. Here's a stock to look at. It's Pfizer out with numbers this morning. Full year outlook for revenue gets a raise. Guidance is a raise. The numbers are a beat. It's a beat and a raise, Tom. Your COVID vaccine revenue for the full year now seen at about $36 billion. Previously, the previous forward look was $33.5 billion, Tom. So it's a beat and a raise. The stock is up 1.74% in the pre-market.
And part of the debate there on the profitability of all this life-saving medicine. This is an exceptionally important interview. All of us are doing our mathematics, none more than parents in America, running through the math, the odds of pediatric vaccine, and then there's a worldwide mathematics gone array. Amish Adalja has done nothing I've seen even close to explaining the anti-science and the stupid mathematics of the moment. He's a senior scholar at Johns Hopkins Center for Health Security. China, Amish, just top-ticked Albert Camus and the plague. They had one case at Shanghai Disneyland. It's a magical destiny, you know, the propaganda of Shanghai Disneyland. And they've quarantined 30,000 people, which is 4 digits, 0.00033, or 1 divided by 30,000. Explain the idiocy of the Chinese math.
It is mind-boggling that they took such a draconian action for one case. And I think it really reflects the fact that there are many people in this world who don't understand that COVID-19 is not going to be eradicated. It's not going to be eliminated. There are going to be cases at Shanghai Disneyland 20 years from now. And in taking these types of authoritarian actions really is not the right policy. It's actually evidence of policy failure. We have rapid tests. We know how to handle COVID-19 cases. You don't need to resort to this type of heavy-handed measure where you restrict people's freedom, especially not in the era of vaccines, in an era of rapid tests. And this is something reminiscent that we saw in countries like New Zealand and Australia. That type of strategy makes no sense now, and it never actually made sense.
What do leaders like you and Dr. Fauci, representing the president, have to do to bring a correct mathematical perspective to this disaster in America?
Well, I think what we have to do is really teach people how to risk calculate and teach people that there are certain activities that are low risk, certain activities that are high risk. And the fact is, we have a very safe and effective vaccine available that makes that risk calculation so much easier. And for someone who is fully vaccinated, the risk of a breakthrough infection is small, and the risk of a serious breakthrough infection is vanishingly small. And I think that's what we have to teach people how to do, and that's what our policy should reflect. The fact that this is not a containable virus, that it's going to continue to have cases, and our goal has always been to tame it, to remove its ability to crush hospitals. And I don't think that these types of activities, like what's going on in Shanghai, really reflect the biology of the virus. It's just really just a mind-boggling, as I said, move that being made this late in the pandemic.
Tom mentioned the fact that parents are doing a lot of calculations right now. The expectation is by the end of this week that the pediatric vaccine will be rolled out in the United States. How much of a game changer is this?
Well, I think for children that are at high risk, it's going to make a major difference to them to reclaiming their lives. And for children who are not high risk, it's a great tool for them to not allow COVID-19 to disrupt their lives. COVID-19 tends to spare children severe disease, so having them vaccinated will allow them, for example, maybe they weren't at a high risk to get hospitalized, but they're at high risk for quarantine, high risk for exposures. All of those protocols can get a little bit looser the more vaccination you have, especially when it comes to, for example, in-person schooling, where we see COVID-19 have a major disruptive force there. And this is a safe and effective vaccine. So even if it's a mild illness that you're preventing in children, why not prevent it? Because who wants a child to feel miserable for a couple of days? And there are going to be kids that I said benefit from prevention of severe disease. So what we're trying to do is make COVID something that's much more manageable. And I think this is a big step towards it, even if not every 5 to 11-year-old parent gets their child vaccinated.
What's the public health benefit to getting them vaccinated? And I say this heading into a winter where people are concerned about additional variants coming into play, mixing with COVID evolving, the idea that we could potentially be getting another wave that becomes more virulent because there is more adaptation of the virus to a more inoculated population.
Well, I think that the main point is the more people that are vaccinated, the more immunity there is in a population, the harder it is for the virus to spread. And if it's harder for the virus to spread, it's harder for it to generate new variants. So the more vaccine we have, the more immunity there is, the less we have to worry about variants. The solution to the variants is more vaccination, and getting that number up in any demographic group is an important goal when it comes to the trajectory of this pandemic.
I look, Amesh, at the trajectory of the pandemic, and I'm going to ask you the rookie question. What's your timeline to the trajectory of this pandemic? John and I fell into this huge trap 18 months ago. John, you tell me, where we were out 3 months or out 5
April, it's
months.
over, Tom.
It's over, whatever.
It's done.
Dr. Adalja, with great respect for you and the team at Johns Hopkins, your medical work in Pittsburgh, how far out is the Adalja perspective?
Well, I think that this pandemic is going to transition to COVID-19 becoming an endemic respiratory virus that we deal with year in and year out. In the acute phase of the pandemic really ends when we don't have to worry about hospital capacity. Right now, there are tens of thousands of people in the United States that are hospitalized, so we're still acting as a public health emergency because we're worried about those hospitals' ability to care for patients. When you remove that through vaccination, through natural immunity, that's when I think we transition to this being something more manageable. That's in the United States. It's going to be something that is a major issue in other parts of the world where they don't have access to vaccines, probably well into 2022. If you look at what the G20 is talking about, 70% by mid-2022 for vaccination. So this is going to be still a pandemic for the rest of the world. It's just some countries are going to move to a more manageable state of it, whereas others are still going to be in the acute phase for some time.
Doctor, thank you, as always. Dr. Amesh Adalja. of Johns Hopkins. Tom Keene, what is going on in China? You talked about Shanghai Disneyland getting locked down with 34,000 people.
It's all of Asia.
Tom, Bloomberg News, careful with its language around some of the stories in China, so I want to read this verbatim.
Please.
The Ministry of Commerce urged local authorities to stabilize prices and ensure supplies of daily necessities, including vegetables, this winter and next spring. That's according to a statement released Monday evening. Chinese households were also encouraged, Tom, to stock up on a certain amount of daily necessities. There's a lot of rumors flying around China off the back of that guidance, Tom.
That guidance folds over to the softs, the agricultural commodities that are catching up. And John, this goes into what does it take to make a bushel of wheat? And the answer is it takes a lot of labor, mechanization, and that means hydrocarbons.
Trying to work out, Lisa, what is going on in the world's second largest economy.
Did you see the story about them saying don't waste food? Banquets aren't allowed, or they're going to try to do buffets rather than serve more food?
A fascinating moment from New York City. This is Bloomberg.
Проходим опасный участок, ответственный. Рустам поднимает тебя на жмаре. Шерпа страхует.
Очень много думал о том, что я сделал, и понял, что сделал какую-то нереальную вещь. Не знаю. Я до конца внутри себя даже не могу поверить, что я через это прошел. Состояние, наверное, организм истощен, потому что очень много физической работы. Своим этим поступком хотел сказать, что только через действие в этой жизни достичь можно абсолютно всего.
Deutsche Bank ready to pay more and pay out more in terms of bonuses for staff to have that strong talent that I'm sure you want?
Well, look, it's a war for talent. It has been, in other cycles before. It is now. We're finding that we're competitive in that war for talent.
I think what we've seen during this period of time is that communicating via video is not a fad, that we are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
The market is certainly testing the limits of the central banks.
I think central banks are always behind markets.
I'm hearing a lot about this fiscal tightening, and I'm not sure I buy it.
Chair Powell has slowly morphed from being ultra dovish to a serious tint of hawkishness.
Even though the destination is not too far away, I think the Fed will be relatively deliberate about raising rates.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
The Fed's two-day meeting begins right now, or a little bit later, a few hours away. You get the point. From New York City. For our audience worldwide, it was deliberate. Good morning, good morning. Your equity market at a record high coming into Tuesday. I noticed that, TK. Let's talk about this market. All-time highs going into that Fed decision tomorrow.
Yeah, it's into the Fed decision tomorrow, and I see all sorts of signals here, John. You've got the equity markets doing what the equity markets doing, a critical interview coming up on immediate bullishness. But, John, I'm sorry, the linkage in here of commodities into what we see in fixed-term critical. Javier Blas at the back end of this hour.
Looking forward to that, Tom, and looking forward to the conversation with Wells Fargo. You alluded to it there. Really interesting call into year-end.
Yes.
Some bullishness. It's new. They weren't so bullish through much of this year. Looking for 4,800 year-end this year. Then a move back towards 4,700 year-end next year. The nuance through next year, Tom, important.
Well, the nuance is important, and what it comes down to is we need to see the data. And we don't see the data yet. I mean, I'm sorry, this Fed is data dependent, and that's going to be their lead comment at that presser.
Let's talk about the data. Lisa, the ISM out in the last 24 hours here in the United States of America. The industry commentary is always interesting, but it's the same. It hasn't changed. Global supply chain issues continue. Getting anything from China is near impossible. Business is getting stronger, but the supply chain is getting worse. Import costs, labor costs, demand continues to be strong. That's the point I want to pick up on here, Lisa. Demand continues to be strong. Business remains strong. Customer demand remains high. That's important.
Well, and this is the issue that Mike Wilson has of Morgan Stanley. It is, for now, remaining strong, but how much does that diminish next year as people whittle down their savings rates, which you are seeing come down, right? And this is sort of one of the pivotal distinctions as we head into a choppier 2022 that potentially could have higher yields to boot.
Did you like that line from Mike Wilson? Enjoy the treat for now, but beware the trick.
I loved it.
Manage your risk accordingly.
It was so holiday
Just
appropriate.
a Halloween theme into the weekend.
You
Good
love
stuff.
Halloween.
Oh, yeah. Every second of it. Equity futures this morning unchanged on the S&P 500. That's your morning sarcasm. In the bond market, yields 155.23. There's more to come. There's more to come. In the FX market, 116. In the commodity market, Lisa, 83.94. Negative a tenth of 1% there.
Yeah, and this Thursday we get that OPEC Plus meeting, and we get a lot of pressure from the likes of the United States and Japan saying pump more at a time when they want to reduce emissions. John, you were great on that yesterday, talking about the irony here, and I know that Tom was watching all of it as he petitioned to become the manager of the Tottenham Spurs. Today, as we get U.S. vehicle sales, really the linchpin of a lot of these supply chain disruptions, as well as the chip shortage. The idea is that we have seen diminished sales of autos, not because there isn't enough demand, but simply because there is not enough supply. We are expecting it to increase a bit. However, prices are expected to also rise. What does this do to demand? When will it diminish it? Today, the two-day Fed meeting commences in Washington, D.C., perhaps not right this moment, but in hours. And this idea here is how much are they going to push back on a market that is saying you are going to hike sooner and faster and more than you are saying that you will? Will they give any indication that they will hike rates 2 times next year, as it seems to be the prediction in markets? And today is Election Day in the United States, including the key gubernatorial election in Virginia. The issue going forward will be, can the Republican candidate, Glenn Youngkin, eke out a win at a time when Terry McAuliffe seemed to have the lead heading into this? What does that mean for midterm elections for Democrats?
Lisa, thank you. We'll catch up with Washington in a few moments. I used to go to the gym in my old building, and Tom would be in there. I would be dressed in Nike, and Tom would be Under Armour. He's a very serious man about his workouts. Tom, Under Armour, your name, your stock, rallying in the pre-market off the back of a beat and a raise. How many times have we said that through earnings season? A beat and a raise.
You didn't go for the punchline, John, as I look good in my Under Armour, sitting there reading the Wall Street Journal.
You look good. 10.51% higher in the pre-market. He did.
Really?
Yes.
Do you have pictures?
Yes. I'd walk into the gym and Tom would beat. We can do this another time. Anyway, that's my fault. EPS, Tom, over at Under Armour. They were looking for 50 cents to 52 cents year end. Now 74.
You know, John, I'm sorry.
That's a raise. That's a big raise.
John, Rebecca Patterson a week ago, 10 days ago, whatever it was from Bridgewater, smartest single line I've heard. It's a demand side shock. Demand is booming.
Yep, demand is good. Will that supply side story and the higher cost with it, Tom, will it weigh on demand through next year? I think that's what we continue to talk about.
Here. You
This
gotta
equity
have
market,
physics.
though, is running on demand, Tom, fueled by it.
John, you got to take physics at Yale to get this done.
Okay, so we get to someone who's done that.
Let's
do that now with Anna Han, equity strategist at Wells Fargo Securities. Physics at Yale, Anna. Is that right?
Physics and mathematics.
There we go. Put us all to shame. Anna, let's talk about 48.25 year end on the S&P 500. 48.25 and then something closer to 4,700 next year. Just frame the view at Wells with your buddy Chris Harvey for us.
Well, I think for this year, and what's really given us confidence into our price target for the next 2 months, look at how 3Q earnings have been coming in. As much as all we hear about is supply chain issues, labor costs going up, labor shortages really, what we're seeing is that margins have been growing overall for the S&P 500 companies. That's telling us that this earnings growth has been robust. And it's partly because, like you guys were talking about before, that demand has been rather inelastic. Demand has been booming. And it's helping us and our prospects going into year end. But like you said, now for next year, for 2022, we're going to see tapering start to finish probably around mid-year. Then you're starting to see rumors about that rate hike being priced in. And that's the kind of environment where we're shifting from this more mid-cycle to late cycle.
So, Anna, your SPX calls Dow 37,500-ish. You know, who knows? And maybe we'll overshoot to SPX 5,000, which would be remarkable. On the way up, adults are going to come to you and say, we must hedge this great bull market. And yet with this convexity, this acceleration, hedges become so expensive. Is that where we are now, that you can't intelligently hedge a great bull market?
Well, as the pace has been accelerating, what's been interesting is you look at the volatility markets and you're seeing that implied over realized is actually not too expensive right now. I think a lot of that's been brought down by the additional confidence in earnings growth and just sort of the better outlook and clarity we're getting. So in fact, hedges, I don't think hedges are that expensive here. I think it's possible. You just got to pick your time frame.
And this is, Lisa, this is absolutely critical, and it's an indication that this is not cathartic. You're not getting the emotion as indicated by expensive hedges where you go, I can't take part.
And part of this is, how do you bet against a market that seems, by some, maybe would call Teflon-like in its appearance in terms of rallying? Honestly, Anna, I do wonder how much this hinges on this idea that there still is so much liquidity in the market based on where the Fed is in their policy, that even if they become a little more hawkish, if they start to taper their bond purchases, you still have negative real yields of around negative 1% on the 10-year yield in the United States. How much is this driving everything at this point, regardless of fundamentals, regardless of what story you tell in the economic cycle?
No, Lisa, you're absolutely calling out that big elephant in the room. Even if we start tapering, these purchases are massive. This is the most monetary liquidity we've had in quite some time. And don't forget, we've had a lot of fiscal stimulus down the pipeline as well, perhaps more coming. So in that kind of environment, it's helping people and it's giving us that flexibility to spend and to move markets around. I think that as that tightens, tapering is just the beginning. And even yields are still coming off of very, very low levels, and credit, while it's widening off tights, it's still historically low. So all that context, it's a great point. I think that's a lot of the reason why I'm enjoying the sort of boost we're seeing now.
Anna, just give me a second. This could be one of the biggest contrarian indicators we've had in quite a while. Lisa, are you sounding a little bit bullish?
No.
Are you sure?
I mean, what is bullish?
Tom, would you go there? Did it start to sound like that, Tom?
What is this Kantian theory? What is bullish?
Well, thank you.
What's going on?
Honestly, Teflon is what the market has been doing. And I do wonder, John, to the point, how much is this just completely backed by the Fed? Don't bet against a Fed that is still accommodative.
I'm going to start screaming.
We got you there. We got you there.
Please do.
John, you're just doing this to get me going.
It was beautiful. Go on. TK, the floor is yours.
I've heard this so many times, John. It is the conflation of well-intentioned macro analysis into the bid-ask of the market, and particularly of the stock market. And you got to combine that in with a careful Gina Martin Adams, Anna Han kind of analysis.
Just to confirm, Lisa is not bullish based on what Lisa just said. Are we done with that now, Lisa? that flirtation with
I'm
that
not bullish
constructive
or
view?
bearish.
You're not?
I'm trying to look around corners that
Of
have
course,
negative
of
things
course.
there, because
Thank you
that's
for
what the
clarifying.
corners are that are concerning.
Thank you for clarifying.
Anytime.
And a final question, how big is the Fed's involvement in this equity market?
It is undeniably large. And if anything, the Fed has made sure to communicate their stance because they know the impact on the equity market. And, to Lisa's point, there is going to be one sector we're looking at in particular, the favorite, tech, that is going to be having a harder time if real yields start to take off. And I think real yields will start to move higher away from these negative territories.
But Anna, they haven't yet. That's a fact, right?
Mm-hmm. Yeah, what's been interesting is as we are getting this consensus on tapering, you would expect real yields to really start picking up. They've been going a little bit the other way lately, and that's what's giving us pause. Talk about looking around the corner. That's a little point of the market that we're wondering, is this signaling something different to us? But I think you need to give it time. We're looking on this day-to-day framework. We need to think in months and quarters ahead.
We're all looking around corners here. Anna, thank you. Anna Han of Wells Fargo Securities, we appreciate it. Send our best to Chris Harvey as well. Lisa, Anna Han coming your way towards the end of that interview there.
It's undeniable, the lift that markets get from a negative real yield of 1% on a 10-year. And the question is, what can shift that? And at that point, you start to see tech come under pressure. You start to see other these interest rate sensitive areas. Until then, that's where the Teflon tone comes from.
Sometimes it's just easier, Tom, not to have an opinion. That's why Tom and I don't have an opinion.
But John,
okay, that's dead on.
That's the signal of a bull market. Absolute silence from the gloom crew.
Just silence.
Is that silence?
No. No.
Nice try.
Not at all. Not sure where you're going with that, Tom. They're not silent at all.
I don't know.
Futures unchanged on the S&P from New York City this morning. Good morning.
Meeting at 11.
Heard on radio, seen on TV. This is Bloomberg.
With the First Word News, I'm Laura Wright. House Speaker Nancy Pelosi plans to push forward with plans to vote this week on President Biden's economic agenda legislation. She's getting pushback from moderates who want a detailed analysis of the full cost and economic impact. That echoes complaints from Democratic Senator Joe Manchin. He says Congress needs more time to assess the bills. Today's election for governor in Virginia will offer the clearest picture yet of how much momentum Republicans will have in the 2022 vote for Congress. GOP candidate Glenn Youngkin is backed by Donald Trump, and polls show he's in a virtual dead heat with Democrat Terry McAuliffe. McAuliffe is betting that the former president's legacy will turn out Democratic votes. Shares of Tesla are falling. Elon Musk says the company hasn't signed a contract with Hertz yet for that record order for electric cars. Last week, the rental car company said it would buy 100,000 Model 3 sedans for $4.2 billion. That sent shares of Tesla rocketing to a record high, but Musk tweeted there was no signed agreement and that Tesla would only sell cars to Hertz for the same margin as to consumers. Pfizer has boosted its earnings forecast for the full year. The guidance beats the average estimate. The drug maker also forecasts that revenue from its COVID vaccine will be about $29 billion next year, well above the estimate of around $23 billion. BP will use the proceeds of surging energy prices to woo investors who are disenchanted with oil and gas. The company will buy back another $1.25 billion in shares. The announcement came as BP reported a big increase in third quarter earnings from a year earlier. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg.
The president's framework does satisfy Senator Manchin, and I understand that he wants to read the legislation that is written based on that framework. When you look at the framework, it includes fully paying for the legislation, using tax increases on the wealthy and on corporations.
Wally Adeyemo there, the U.S. Treasury Deputy Secretary from New York City this morning. Good morning. Tom Keene, Lisa Abramovitz and Jonathan Ferro. Your equity market shaping up as follows. All-time highs into Tuesday as the two-day Fed meeting commences. A little bit later in Washington. They get up later, don't they?
Yeah, of
Lisa,
course.
what time?
Everyone gets up later.
Midday, something like that. 155.58. I was going to joke about day trading. Let's not do that. Let's not do that. Euro dollar 115.99 in the commodity market 83.85. Tom, I love the ongoing contribution from some of the audience. This from Doug Cass. There is no silence from this Gloom Crew team member. No silence from this Gloom Crew team member.
Yeah.
Doug's out there loud.
Doug's out there. And this is very important, folks. People like Gartman and Cass, they actually show their track record and discuss things that they succeed at and fail at as well. It's good to hear from Mr. Cass, the Seabreeze down in Florida. You know, John, he has the least expensive house in all of that part of Florida.
You like to share where people live, Tom, and how much?
No, I'm not sharing where he is. He's in Florida.
Just to be clear, I read it verbatim. He said groom. He meant gloom. I know what he meant. Just, you know, carry on.
That's good journalism, John. Good job.
Just, you know, you've got to, haven't you?
Terry Haynes can count as well with Pangea and policy founder in this exercise on this Tuesday of an election, and always a strange after a big presidential election. Is Terry Haynes of Pangea. He can count the Democrats, he can count the Republicans. Terry, what do you make of the need for Democrats to show up in the suburbs of Virginia? Put some color on that for us.
Well, the bottom line here is, I think that the Republican, the former Carlyle co-CEO Glenn Youngkin, is about 60% likely to win. He's got the wind at his back, certainly.
Yes.
And among likely voters, he's got a slight lead. And you can tell a lot about candidates by where they're campaigning in the final days. Democrat McAuliffe has been spending a lot of his time in the Northern Virginia suburbs, frankly, trying to shore up those suburbs. And, I can give you, another data point in addition to the slight Youngkin lead among likely voters, which is Biden has gone to -7 in October from a state that he won by 10 last year. So, what you've got is a situation where the suburbs are fleeing, and if McAuliffe's going to win, he's going to have to hold on to it.
And Terry, what's interesting here on a historical basis, it reminds me of pre-Teddy Roosevelt. It reminds me of the nation in 1890 where, with Blaine, year to year, things shifted seismically on the mood of America. I usually don't do this, Terry, but let's say the Republican wins in Virginia, and maybe the gentleman up in New Jersey has a tougher time winning as a Democrat. Will that change the domestic policy dialogue Wednesday morning in Washington?
I think it changes it some. National Democrats won't turn on a dime. People who are from the bluest of blue and progressive to boot are not going to take these results and decide they're going to change entirely the way they think or what they want. But I think what they are going to, what this does, what your scenario does, is create a world where they're thinking more about accomplishment and a little less about posturing. And I think that's good for markets largely because what the market's been waiting for from Washington is in a point of high political risk is accomplishment on the real infrastructure bill and a smaller social spending agenda that doesn't include a lot of the taxes and a lot of the other mandates that progressives have been brooding about. That's a very good result from Democrats. And the scenario that you put together, I think, helps make that happen.
Terry, how much is Virginia a microcosm of the rest of the country when it comes to politics? How much is this race really a referendum on what the Democrats have done so far versus really highlighting idiosyncratic issues within Virginia having to do with education and other local types of flashpoints?
It's some of both, Lisa, for a couple of reasons. One is that Virginia is a really purple state. People like to say it's trending blue, but then again, the last two elections, I think the national elections anyway, have been, unusual candidates on both sides, to say the least. Let's put it that way, with lots of negatives, right? Hillary Clinton, Donald Trump, both. Even the education issue in Virginia, which is the thing that's really firing Youngkin's jets here, with McAuliffe's gaffe that parents shouldn't be involved in their deciding their children's education. That is an issue. It certainly is a national issue, but it's particularly local in Virginia, and with its own characteristics. And and the locality of that, and the way that famous Loudoun County out in the suburbs has been treating critical race theory and a bunch of other hot button issues. That has a lot of local resonance, particularly in the Northern Virginia suburbs that Tom started off with.
Terry, let's talk to the team, your team, my team, and get together again later this week, because I think we've got more to talk about on this front when we start to get results. Terry Haynes there of Pangea Policy. Let me share with you a true story. One day, Tom Keen's Twitter account got hacked many years ago. And do you know who flagged it on Twitter, Tom? Mark Benioff of Salesforce had to come out and let TK know that his Twitter account was hacked. What happened, Tom?
I can't go into the details because of a lot of legal stuff, but I was hacked like everybody else. And John, what's so important here, a lesson for everybody, particularly with young kids, if I wasn't so rushed and hurried, I wouldn't have been hacked.
Saved by Benioff.
I was trapped. Benioff came to the lecture. Let's do this right now. It is COP26, our Francine Lacroix in Scotland with Mr. Benioff. This is a guy out of an apartment who said the end of software, and in doing that moved on to billions, and with his wife Lynn to making all sorts of philanthropy. He has spoken with his money. In Scotland, Francine Lacroix.
He has spoken with his money, Tom. You're absolutely right. And I am delighted to be joined by Mark Benioff right after, right before this, actually. You were in a panel 2 hours on deforestation. You've been pushing this for such a long time.
Yeah.
But we need to do more on other things. Deforestation is good. It's only a drop in the ocean.
Well, it's one of the most important things we can do. We have lost 3 trillion trees on our planet. We deforested from 6 trillion trees. We only have 3 trillion trees left. Every trillion trees sequesters 200 gigatons of carbon. We need that carbon storage. This is really important. So to see those world leaders make those commitments, I'm shocked, actually. I am really shocked.
Okay, their pledges, how do you make sure that then they go out and actually count what's been done and are held accountable if they don't?
Well, this is a huge moment where world leaders and also philanthropists and CEOs all came together around reforestation. Look, every CEO, like me, we need to do 3 things. 1, you've got to go net zero. Yep. So Salesforce is already a net zero company and fully renewable. 2, we need to plant 1 trillion trees. Okay. So that's why we started 1t.org in January of 2020. But to see that amount of progress in 18 months, that I feel very inspired and energized today. And 3, we need to energize an ecopreneur revolution. So there's all these cool entrepreneurs here, but they are ecology entrepreneurs. So they're creating all these next generation innovations, and that is very exciting to see these things happening here at COP26.
Talk to me about cash. So you're, spending $100 million over 10 years? Are you increasing that?
Well, we're doing a lot of different things. But we have a $300 million tree fund, which is all about accelerating 1t.org, which is our trillion tree initiative that we created. And it's exciting to see it now. It is so well aligned with what's happening here. I mean, it's beyond my expectations, honestly.
Can billionaires do more at this point, in this juncture?
Absolutely.
Like what?
Well, I think, like I said, number 1, everyone's got to go net zero. You've got to go net zero. I've got to go net zero. Our companies have to go net zero. And until you go net zero, I don't have a lot of conversation with anyone, because I want to make sure that they are net zero, not in 2030, not in 2040, not in 2050, right now. So Salesforce is already net zero. This is really important.
No.
And then 2 is we need that sequestration capability. We have emitted 100 gigatons of carbon since the first industrial revolution. Now we could sequester 200 gigatons of carbon through these trees. That is exciting.
Does it have to come from governments? So I know you're saying companies need to be net zero, but if you don't have the push, if you don't have the regulation to mandate it, there's going to be people falling through the cracks.
I'm so glad that you said that, because I am so impressed with President Ursula von der Leyen and what she has done with the EU Green Deal, in that she is basically charging companies who are not net zero for their carbon. So companies, CEOs, like that's what I'm CEO, I have to make sure that if I'm going to go trade in Europe, that I'm net zero. Now, I already am. But think about all the companies that aren't yet. Those CEOs are all thinking about, how do I get to net zero right now? And that's exciting. So she's leading the world. I mean, Ursula is amazing. And to see her do that, I think she will transform how CEOs are thinking about carbon today.
Mark, I think part of your deal on Slack also had a green component, right, on bonds. Do you see that actually being more in your acquisitions going forward?
I really, well, you're 100% right. To see financing instruments that are like green bonds and, the idea that everybody needs to do everything they can to get to net zero. So we can do a green bond, or we're regarded as a sustainable company because for years and years we've been working to get to this point where we can say, hey, we are fully net zero and renewable as well. So, but we're still cutting emissions still, and all of our suppliers now, they have to contractually commit that they're going to net zero. This is a lot of hard work for everyone. We're also building a sustainability cloud. We're doing a lot of things, building an entire ecosystem to help our customers get to net zero as well. Everyone is going to need a lot of help.
So how important is it that in M&A transactions, actually, there's always a green financing component?
I think it's important, but it's not as important as that number one. That is, until you're net zero, nothing's going to happen. And a company can come in and say, hey, I want to do a green bond, but hey, show us your carbon footprint.
Okay, in 20 seconds, what do you tell to fellow billionaires and chief executives watching? What do you want them to do November 2nd,
Plant a tree.
2021? Only one?
Plant a tree. Hey, if everybody planted a tree, that would be amazing. If they just realized that how important the tree can be in creating a better planet. But no, number one is net zero. Go net zero. And number two is plant a tree. And number three is let's get an ecopreneur revolution. I'm from Silicon Valley, you know that.
Yep.
And there's a lot of exciting companies, many of them here now, who are building solutions, and I think they're going to really help us to accelerate this world.
Mark, thank you so much. As always, energizing. Mark Benioff from Salesforce. More coming up from COP26. This is Bloomberg.
Today's CFOs are reshaping the C-suite, positioning companies to meet the next generation of challenges, breaking out of traditional roles to become Chief Future Officer. This week, find out how Harmeet Singh is spearheading Levi's investments in innovation.
As CFO, the one important thing is to ensure you're able to connect the dots and always think longer term.
Watch the world premiere of Chief Future Officer this Wednesday on Bloomberg.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
Let's whip through this one. We've got a busy morning. From New York City this morning, good morning. I'll do my best, Tom. Equity futures down a single point. We're negative 0.02%, pulling back just a little bit from all-time highs. On the NASDAQ 100, softer down, lower, negative by 0.2%. Small caps doing nicely through the last 24 hours, up a little more than 0.1% this morning. From equities into bonds, switch up the board and we'll take a look at the bond market. It's a global story at the front end of the yield curve.